India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Coming out of a weekend, Monday morning, lots and lots of stuff to track. Lots of earnings over the weekend and many more lined up ahead. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, morning guys. And I'm coming out of a 3-day weekend. Friday I wasn't here, so it's that much harder, right? But yeah, getting to it, and we've got plenty to go over. So many earnings. So much going on in global markets as well?
Well, I think on the domestic cues front, what the bulls will want to see is some earnings surprises, because last week wasn't particularly good with regard to earnings. So let's see how that goes.
Yeah, absolutely. And that was a problem because global markets were doing well. They are doing well as we sort of come into this session as well. So let's just rewind the clock back and tell you where we left off on Friday. It was a good session on Friday. And, a market had gotten extremely oversold. We detailed some of those indicators like the Nifty PCR, etc. on Friday morning. We had a sharp cut intraday after open, and then there was a 300-point recovery on the Nifty from the day's low. We basically, on both the Nifty and the Bank Nifty, broke the prior lows and then staged strong recoveries. This is the quantum of recovery for both those indices on Friday. Nifty bounced 300 points, the Nifty Bank bounced 1,100 points from the day's lowest level. I mean, by close day on day, which is Friday's close to Thursday's close, it looked like a 100-point gain on the Nifty. But from the lows, it was a much stronger session. Now, the global stuff, right? U.S. equities, it's not as if the globe has been the problem. U.S. has been making all-time highs, incremental stuff happening in China. You may like it, you may not like it enough, but something is happening, right? German, for example, European equities and some of the troubled markets there are starting to come back a little bit. So globe has not exactly been the problem. So S&P, NASDAQ, fresh all-time highs. NASDAQ was up 0.63, did a little better compared to the S&P because yields were a little lower. This is, by the way, the 6th straight week of gains for the U.S. markets. Yields, dollar and oil were all lower. The Trioca was all down on Friday. This is good news. Now, focus, of course, remains on U.S. elections. We are basically, just about 2 weeks away from U.S. Voting, and the tempo, the momentum, etc., is picking up. But what has also happened in a very marked fashion is that betting markets, if you take an aggregate of betting markets, they have progressively skewed and very aggressively towards Donald Trump. It was looking like Harris was cruising along, but over the last 2 or 3 weeks, and I think it's coming into sharper focus now, Trump is very much in the lead. That's something to keep an eye out on. And I think over the next 2 weeks or so, we'll also try and look at what a Trump presidency may mean for emerging markets in India specifically as we go along. If that is indeed the case, I'm sure it'll go through a lot more volatility, and 2 weeks is a long time in politics, but keep this in mind. Now, the immediate kind of factor could be that Trump's odds could keep Treasury yields and the dollar stronger. Yields higher and dollar stronger. His, of course, agenda is much more fiscal expansionary as compared to Harris. So that's the one channel via which it affects financial markets. Now, just to circle back the levels here. So we've had a nice bounce and a decent close on Friday. We need to defend some of these levels now and hold on and build on to some of those gains. So how do we decide whether the market is starting to get out of this phase? You've got to look at levels. 25,234 is the near-term upside level to take out for the market. That beyond that, I think you can expect a little bit of near-term momentum, but that's the first marker that the Nifty at least needs to get above. On the way lower, 24,567 was the low, and that should not break. That should hold in case selling starts to emerge. Nifty Bank broke the low of 51,005. That is on Friday, and then, of course, bounced. On the way up, the near-term resistance for the Nifty Bank is 52,835. It's a 61.8% retracement. And on the lower side, 51,000 is the level which the Nifty Bank should now not break. I mean, you know, on Friday morning, I was saying that perhaps is getting very, very oversold, and a near-term bounce perhaps is round the corner, short-term bounce. How much more momentum in the short-term bounce, I think, is the question. And in that regard, I'm still not very sure that this is it, that this is the bounce, this is the turn, and the market's really now going to start to fly. A lot will depend on incoming data, especially earnings here in India, which have been the problem. I mean, actually, if you look at the top earnings over the last 2 weeks or so since the earnings season started, I would say about 60-70% of the numbers have really disappointed. If not on the top line, then definitely on the margins. That needs to improve over the next few weeks from here. Surabhi.
Well, Prashant, absolutely. And speaking of US elections, you guys saw that story. I read it 3 times to make sure I was reading it right. So $1 million a day being given by Mr. Musk to anybody who's signing his pro-Trump petition. And I think it's gone into some regulatory issues over there. But yeah, $1 million a day for whoever's willing to sign. So it was very, very entertaining to say the least.
Although this morning I saw a tweet from him, I think because of all of the thing. He said, well, it's not for registering as a Trump supporter or as a Republican supporter. It's for anyone. You just have to sign some America
petition,
First petition. $1 million.
Not bad at all, right? But, okay, coming back to markets over here. What all this uncertainty is doing is giving a huge bid up to gold, by the way. While we were talking, global equities are doing fine. Gold is doing even better. So, you know, when you look at markets this morning, the handover from Wall Street has been positive, and most of the Asian markets are running with that positive handover. But let's pull up some of the indices as well, because in China, we've got that announcement on the LPR. So the 1 and 5 year loan prime rates, they've been cut by the PBOC by 25 basis points. So more easing announcements continue out of China. Chinese equities are having a more measured reaction to that, because last time I checked, mainland Chinese markets were slightly up, but Hong Kong was a little lower. The other markets like Nikkei now are holding up fine. So China is not an issue at all. If we talk about gold, like I said, that's the other big headline, 2,700 already on the board. And the other huge headline also continues to come in from oil. Oil fell 7% last week, by the way. So let's see. But none of this, the fact that global markets are higher, that oil is lower, none of it is really helping our cause, because we have our own issues to deal with. And that issue is FPI selling, which sort of gets me to the local cues over here. So 3 weeks of a decline on the Nifty, and that's the longest losing spree that we've seen so far this calendar year. Doesn't have a very festive ring to it, but it is what it is. We're already below, of course, the 20 and the 50 DMA, and the bulls will really hope that this 100 DMA is not tested again and pushed forward. It's still a way off from where we closed on Friday, 24,500 odd. The FPI selling issue is the big one for the market, like I said. Again on Friday, that selling number is going above 5,000 crores. So remember, in the earlier part of the week, the selling had reduced to just 1,500 odd crores. Well, that wasn't to last too long. Domestic institutions are offsetting much of this impact. But look at the onslaught. The net selling so far in October, and this is, by the way, final data, not the provisional one. Net selling in October is already crossing 77,700 crores. And we don't know when this ends. This is the biggest issue that our market is facing. Now, earnings, like Nigel also pointed out, we've got a big mixed bag that we'll go over as the show progresses. But, you know, in a summary, some of the financials are flashing red, and the market is going to pay a lot of attention to asset quality issues, which are really showing up in cases like Kotak Mahindra Bank, where slippages are rising. Even RBL Bank, I mean, not only is there margin compression for RBL, the rise in slippages is going to be a big talking point today. So let's watch out for these financials. Thankfully, HDFC Bank has been best in class. So for all the badgering that HDFC Bank was, giving, at least on the numbers front, there's nothing to complain. Very steady, asset quality is steady, and, margins, etc., most of it is in line. So that's something that the bulls will really hold on to. And also for the fact that Tech Mahindra within the IT pack after Infosys, you'll see some relief on at least Techem, because numbers are in line. In fact, slightly better than estimates. Margins have expanded as well. Beyond earnings, one more stock to keep on our radar today would be JM Financial, because there's some relief coming in from those RBI curbs. But whether it rallies like a IIFL, we don't know. We'll have to wait and see, because JM is already on a tear. I mean, it's already close to a 52-week high. So one more stock. But I think it's going to be very, very granular. And Nigel, as you said, very earnings specific. Those earnings misses cannot be, the market's already going in with subdued expectations. But any faltering there is going to hurt.
Well, indeed. And at least for starters, we have the global tailwind that's working in our favor, because the dollar index, it was looking like it was going to go to 104. But we wake up today and it's closer to around the 103.5 odd mark. So the dollar index cools off. Well, that's good news. And Brent crude prices, as well as Surabhi mentioned, it's down close to around 7% from the recent peak as well. And gold, that's doing a thing of their own because of the softer dollar. Well, you have gold prices as well that's moved up to a fresh all-time high. What caused the bounce though on Friday? And remember, the Nifty bounced, but we're still not out of the woods. And the key reasons that we saw, with regard to the bounce was that the emerging markets did well on Friday itself. China was up close to 2.5%. The institutional net sell number, I take the FI and the DI number together, that was only around 270 crores, which is sharply lower than the 1,500 crores odd. And there were some shorts that were covered by the FIs. Clients, they remain net long with more than 2 lakh contracts on the long side, while the FIs, they remain net short with close to 1.5 lakh contracts on the short side. Moving to the options data, 2 strikes were fairly active in Friday's trading session. The 24,900 call, well, that added a fair bit of open interest. And the 24,700 put out there as well, we did see signs of writing on both these 2 strikes. So going by the options data, going by the recent trends, it appears like we're in the 600-700 point range on the Nifty itself. On the downside, 24,550. On the upside, around this 25,300 odd mark, and that perfectly tallies with the recent highs and lows that we've seen in the month of October itself. So I think the Nifty is in a bit of a band. The Nifty Bank, well, that's even more interesting because you've got a couple of big earnings reactions that will play out today. And you see in Friday's trading session, it appeared it was making that move gradually to around the 20 DMA, which comes in around 300 points higher. So that's going to be an important level. If you need to breach that, then we'll see further follow through. But irrespective of the numbers, actually, the Nifty Bank was showing signs of coming out of that recent underperformance. And on the downside, it's around 400 points lower, which is, in fact, the 50 DMA on the Nifty Bank. 2 stocks that I'm looking at for today. Dalmia Bharat will tell you about the numbers in greater detail, but the stock has been a rank underperformer. For this year itself, the stock has already seen a sharp correction from, from the recent peak. So it's, closer to the lower end of the band. Will there be a bit of a bounce because the street is net short on Dalmia Bharat and the second half of the year is expected to be better. So it starts off in the red, but we'll have to see what happens from there. That's a stock I'll track. The second one that I'm looking at, the clutch of stocks for this third quarter itself, is going to be the OMCs. Crude oil prices have cooled off. The marketing margins have moved to around 10 rupees per litre, which is much higher than the averages that we've seen in the last couple of years. So I think for quarter 3, this is a sector that we'll keep an eye out on. OMCs in focus.
Okay, all right, got it. So Nigel will definitely keep all of those stocks on the radar. In fact, there's lots lined up on the show. So let's quickly run you through today's lineup. Well, to start off with, we will have at 8:40, Samir Bhise of JM Financial to decode earnings from Kotak Mahindra Bank. A lot of those bank numbers have come through, so we'll talk about that. At 9 a.m., we'll have the management of Netweb Technology. Sanjay Lodha will join in to detail their second quarter performance. At 9:20, Harsha Upadhyay of Kotak Mahindra AMC joins in. He's our market master of the day. At 9:30, we get chatting with Hindustan Zinc. Strong numbers over there. So we'll have the management talk about whether this can really sustain. After that, the spotlight is on the FMCG space, and the early trends have not been very encouraging. So what lies ahead as the season rolls out? Abanish Roy of Nuvama Institutional Equities joins in. At 9:50, Gopal Balachandran of ICICI Lombard will be with us to talk about the second quarter performance and the fact that underwriting losses are expanding, though growth is looking good. And then, of course, our special segment, It's the Economy. Lata today is in conversation with Santanu Chakrabarti of BNP Paribas.
Well, time for a quick break, but we have lots of stock-specific action to track. We'll get to that in just a bit in our special Top 10 segment, but let's run it through the list. We look at HDFC Bank, Tech Mahindra. They are the stocks that will be reacting to positive news flow, while a whole host of them will be reacting to negative news flow, including Kotak Mahindra Bank, Tata Consumer, L&T Finance, RBL Bank, ICICI Lombard, Dalmia Bharat, India Mart, and MCX. We'll get to them in greater detail on the other side.
Welcome back. Here with us on Bazaar Morning Call. Let's get into our first conversation on the show today. We have Ed Yardini joining in to talk about the global setup, which has been looking fairly buoyant. No problems over there. Mr. Yardini, good to have you on the show. Thanks very much for taking this call. So the US market, it continues to rocket higher, propel higher, and gold is doing its own thing. Oil is crashing. So very dramatic moves across different asset classes. What do you make of it?
Well, look, much of this depends on what's going on in the United States, particularly with the Federal Reserve, and of course, with the geopolitical situation. I think what we're seeing with gold, especially, is a geopolitical issue. Ever since the United States put sanctions on Russia, I think the Chinese have been buying gold. And so I think that explains why gold is doing so well. And here, in terms of why our stock market's doing so well, the economy is doing extremely well. And it's not even clear that the Fed needs to lower interest rates, but it did, and that's bullish for the stock market.
Got it. Ed, by the way, I don't know if you saw that latest Stanley Druckenmiller interview on Bloomberg. And he's been of the view that maybe the 50 basis points was a mistake. You know, it was an interesting one. But what do you make of the 2 weeks to US elections, Ed? Do you think betting markets all favor Trump now? You think it's positive dollar, positive yields?
Yeah, I don't really think we can go with any of these indicators. I think it's going to be a very close election. My concern is that's actually a risk for the market. If it's too close and there's some conflict about who actually won, that would not be good for the markets. The other possibility is it'll be a sweep for the Democrats or for the Republicans. That would not be good for the markets. The best outcome would be a gridlock situation where either Trump or Harris is in the White House, but they don't have the House and the Senate. That they still can't get all their policies through. The problem with both candidates is that they don't really care about deficits and they don't care about the inflationary consequences of their policies. I think that's where the risk is in the market. Domestic politics and geopolitics are the main risks for the markets. The domestic economy is doing fine. I don't think the Fed really needs to lower interest rates anymore. I think I discussed this before. I'm in the none and done camp. I don't think we need a rate cut in November or December.
I recall you saying that, Ed, you're in the camp that believes that maybe we don't get another rate cut this year. But what about on the S&P 500? You know, we have been chatting all through the year, and I think you had a target of around 5,800. We're already trading above those levels, and the S&P 500, I think, is on a 6-week winning streak. Where do you think we'll end the year? A bit of, you know, should we see a melt up, so to call it? Should we breach for 6,000 levels plus?
Yeah, we've been talking about the possibility of a melt up, but it hasn't been our most likely scenario. But we may change that opinion. I mean, when the Fed cut the Fed funds rate by 50 basis points, we actually raised the odds of a melt up from 20% to 30%. We're right now staying with 5,800. We think, yes, sure, and that would be by year end. That doesn't mean that the market couldn't continue to move higher here to 6,000 or even a bit above 6,000. But as I said, I think we're entering a period here where there's going to be a lot of geopolitical and domestic political uncertainty. As we saw in the headlines, Hezbollah sent a drone to assassinate the prime minister of Israel. And meanwhile, Israel's considering what they're going to retaliate against Iran. So there's a lot of geopolitical risk. And at the same time, as I indicated, the domestic political situation could be quite unsettled, even once the election is complete.
Yeah, and for now, at least, the equity market is not looking at these risks at all. It's only focused on the economy, which is doing quite okay, like you said, Mr. Yardeni. Thank you for joining in. Let's see how this plays out. Appreciate you being with us on the show this morning. All right, that's the global setup. No problems over there. It's all about earnings. So let's straight away dive in. Our team is standing by with the CNBC-TV18 list of top stocks to watch. And let's start with the good first. And kicking it off is Abhishek with HDFC Bank.
Well, it's a steady quarter for HDFC Bank in Q2 FY25 with respect to the business momentum and the P&L. The net interest margin on total asset declined by only 1 basis point sequentially. That was anticipated by analysts as well. A fee income growth that surprised positively, growing by more than 15% on a sequential basis. The slippages of formation of bad loans in a quarter that declined sequentially and was below analyst estimate as well at 7,800 crore versus Morgan Stanley estimate of 8,000 crore. Asset quality 63 basis point increase in gross NPA ratio. Now, this is despite the fact that, asset quality has remained stable, despite the fact that loan growth has been pretty weak for them. So, ROA or return on asset at 1.96% is perhaps the highest that you are seeing in last 3 to 4 quarters. The credit deposit ratio has fallen below 100% for the first time in last 5 quarters, and that's heartening to see. SDB Financial, the AUM growth is pretty strong over there at 26.5% YOY and about 3% sequentially. In terms of the P&L performance, both the ANA and PAT is a beat on our poll. Back to you.
All right, Abhishek, but we can't let you go at that. You've had a busy weekend. Tell us about Kotak Mahindra Bank as well.
A weak quarter for Kotak Mahindra Bank. Take a look at deposit growth of just 15.1% YOY is perhaps the weakest that you are seeing in last 7 quarters. Advances growth on a YOY basis is less than 15%, so it's a 12-quarter low. And on a sequential basis at less than 2.5% is perhaps at a 13-quarter low. The net interest margin did get impacted as cost of funds increased. So net interest margin has come in at 10-quarter low and for the first time below the 5% mark. Operating profits that continue to decline for 2nd quarter in a row, and for the 4th time in last 5 quarters that operating profits have declined on a sequential basis. So PAT growth is less than 5% YOY, which is perhaps the weakest growth that you are seeing in last 10 to 12 quarters due to elevated provisions because slippages increased to 1,875 crore. Analysts were pegging at 1,630 crore. So annualized slippage ratio of 1.88% is perhaps the highest that you are seeing in last 9 quarters. With reference to the PNL versus our poll, the NI is beat on our poll. However, the PAT on account of elevated provision is below our poll. Back to you.
All right, Abhishek, thank you very much for that. We'll come back to you for more because there is more as far as financials are concerned. Tata Consumer is the next one we want to focus on. Numbers. Mangalam has got those. Mangalam, good morning.
Good morning. So adding to the spate of weak numbers this time around, Tata Consumer as well. Weak numbers from the consumer space is what I'm talking about. Because if you look at it, revenues, the reported numbers were slightly below street expectations, what the street was working with. The EBITDA as well, 626 crores versus expectations of 644 crores. The net profit was largely in line, a marginal beat, but that was mainly because of a tax expense of 37 crores versus a tax expense of 131 crores. If you look at the internals, the India beverage business saw a revenue decline of 3%, a volume decline of 4%. The company attributes that to soft demand. Ready-to-drink business, which was a growth driver, actually declined by 11%, and they are saying that there were competitive pricing actions, perhaps coming in on the likes of Reliance's Campa acquisition, and growth businesses itself grew just 15% versus a 30% growth expectation. All wasn't lost. We did see some improvement in international margins and the acquisitions of Capital Foods as well as Organic Food India, but internal weakness may keep the stock under pressure today.
Okay, so not sounding too good. I mean, some of the consumer numbers and commentary that we've seen so far. Thanks for that, Mangalam. Let's head back to Abhishek. I think he's watching out for a whole host of other names as well, including L&T Finance and RBL Bank. RBL Bank as well. I mean, asset quality issues emerging there. Abhishek, take it away.
Well, to begin with L&T Finance, their AUM growth has not led to PNL growth. So the AUM growth is healthy over there at 18.2% YOY and about 4.8% sequentially. But the net interest margin has declined to 8.82% versus 9.11% in the previous quarter. Even the provisions have spiked up, by 15.5% on a sequential basis as asset quality has deteriorated with gross NPA ratio increasing by 5 to 6 basis points on a sequential basis. So the PNL, both the ANA and PAT is below our poll. Now, RBL Bank can be termed as the weakest result in the BFSI space over the weekend or in Q2 FY25 so far. So with reference to the ANA and PAT, they are below our poll. Net interest margin is at a multi-quarter low, 5-quarter low, 5.04% versus 5.67% in the previous quarter. It's a sharp decline of 63 basis points on a sequential basis. Now, slippages were elevated at 1,026 crore, perhaps at a 12-quarter high with reference to quarterly slippages, and that annualized slippage ratio is very elevated at 4.67% versus 3.32% in the previous quarter. So this is at an 8-quarter high. Gross NPA ratio and net NPA ratio, they have increased on a sequential basis. The return ratios were already weak, both the ROA and ROE. So they have continued to decline and they are one of the lowest that you are seeing in last 11 quarters for RBL Bank. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Yash. He's here to tell us about ICICI Lombard. Yash, morning.
Good morning, Nigel. So going strictly by the second quarter numbers, I'll put a red on ICICI Lombard. That's because the top line of the premium growth has been pretty strong for the company, but operational performance seems to be weakening on a year-on-year basis. So your net earned premium for the company in the second quarter, that grew by 17%. That came in at about 5,026 crore rupees. Remember, Nuvama's poll here was at 5,170 crore rupees. Underwriting loss, that went up 9%, and that's the operational weakness that I'm talking about. That came in with a loss of about 161 crore rupees versus a loss of 147 crore rupees. Nuvama's estimates here were bang in line at about 161 crore rupees. Operating profit, that went up by about 11% at 664 crore rupees versus 597 crore rupees. And importantly, combined ratio, that weakened further by about 60 basis points, came in at about 104.5% versus 103.9%. Nuvama's estimate was also about 103.5%. As I said, strictly going by the numbers, putting a red on the stock, but there's a strong positive which has come over the weekend for all general and life insurance companies. That is the GST GOM, recommending an exemption on GST when it comes to health and life insurance products. So that could be a positive for the stock today.
All right, and we'll sort of try and quantify that as well. Yash has done that earlier. We'll, of course, chat with the management. Gopal Balachandran of ICICI Lombard. You'll hear from him later at 9:50 this morning. So that's what's coming up. Well, let's move on and let's talk about Tech Mahindra, which has reported a good set. Rima is here with details. Rima, morning.
Hi, it's another good quarter for Tech Mahindra. Expectations were low, but the company has managed to beat that. So this is the second consecutive steady quarter. So good going under the new CEO. The company's top line growth, 1.9%. Constant currency revenue growth, 0.7%. High-tech, communication, BFSI, these were the growth drivers for the company. There was margin expansion. Profits went up 46%, aided by higher other income. Now, the only question is that, the company has an aspiration that by FY27, they will achieve industry-leading growth and EBIT margins of 15%. So Q1 is a good quarter. It's a step in the right direction. So the company is moving in the right direction. But will they be able to achieve this, tall ambition that they've set out by FY27? That, according to analysts, say could still be a bit challenging.
All right, Rima, thanks a lot for that. So we'll keep an eye out on Tech Mahindra. Dalmia Bharat. Well, there were shots in the system getting into these numbers, and the street was sensing a weak set of numbers. And boy, weren't they weak. The sales number missed our estimates. EBITDA number as well was a bit of a miss. Margins in turn came in at around 14%. We were working with around 15%. And the profit number as well missed estimates. Now, what was good about these numbers was volume growth was a little better than estimated. It was at around 8%. That compares with 6 to 7% that we were estimating. And remember, they had that tolling pact with JP, which has now been stopped. So in spite of that, actually, they give a fairly decent volume growth, which could tell you that they pull back some market share out there. What was disappointing, though, is that realizations. That declined by more than expected. It was down more than 6% on a sequential basis. And that's the key reason that these numbers are disappointing. So sharper than expected decline on realizations and higher than expected costs caused this EBITDA per ton to come in only at around 650 rupees per ton. And if I'm not mistaken, this is the lowest we've seen in more than 5 to around 8 years, in terms of an EBITDA per ton. But we'll keep an eye out on the stock. Valuation-wise, well, it's not trading very, very expensive. On an EV per ton basis, it trades at around $90, which is not expensive. And there are a lot of shots in the system. In all probability, the street expects to see a better second half of the year. So after starting off in the red, I'll be interested to see what happens to the shots in the system.
Okay, lots of stocks with negative earnings sentiment around them. Let's go back to Rima. I think she has one more for us. India Mart not quite meeting the cut, Rima.
Well, Q2 was fine, largely in line with expectations. 18% revenue growth, very, very sharp margin expansion. Margins went up from 27% to 38%. So therefore, profits went up 95%. But there are two, negatives internally, which makes the analysts cautious. One is the paid subscriber growth continues to remain muted. And two, collections for the company dropped in the current quarter to 5% versus 14% in the prior quarter. So these two continue to make the analysts cautious, which is why Jefferies today has downgraded India Mart to an underperform from a buy. Back to you.
All right, Rima, thank you very much for that. Well, MCX is the next one we're going to focus on. Vamakshi's got details of this one. Vamakshi, morning.
Well, good morning, Prashant. MCX reported a mixed set of numbers in the quarter gone by. Revenue came more or less in line with what the street was expecting at 286 crores. But sequentially, it's a 22% uptick for the revenues. The margins, however, have come in nearly 443 basis points below the street's expectations. The street was working with a number of somewhere around 67%. But the margins this time around have come in at 62.83%. But it is also important to note that it's a sequential uptick as far as margins are concerned. They've improved by almost 627 basis points. Net profit has come in at 154 crores. This is an uptick of almost 38% sequentially and a 10% beat. So overall, the numbers definitely look mixed, but the net profit, outperformance is largely being driven by the growth that we've seen in the other income. The growth in revenue is largely being driven by the option segment. ADT for the options saw an uptick of almost 32% sequentially. Their traded clients too were up nearly 20% sequentially, so that bodes well. However, we have a note coming in from Morgan Stanley. They have an underweight call on the same target price of 3,245. They believe that the net profit missed their own estimates due to voluntary SGF contribution and provisions toward regulatory matters. They think key topics on the call will be regulatory risks and timeline of joining the news joining of the new CEO. The con call is scheduled today between 4 to 5 p.m. So overall, I believe it's a mixed set, but going with the red mainly on account of the miss on margins.
Okay, Mamakshi, got it. We'll keep that on the radar as well. Thanks very much. So let's quickly recap our list of stocks to watch. And hey, you only have two names that have positive sentiment around them on the back of earnings, and that's HDFC Bank and Tech Mahindra. And here's a list of potential stocks with negative sentiment around them. Kotak Mahindra Bank, Tata Consumer, L&T Finance, RBL Bank, ICICI Lombard, Dalmia Bharat, IndiaMart and MCX. So plenty of red on the screen. Let's see if the stocks recover after the initial disappointment. We have now Manisha joining in. Commodity is obviously as important as always. She's got the roundup this Monday morning for us. Manisha, good morning. What are you tracking?
Well, I'm starting with an all-time high yet again in case of gold prices, $27.25 an ounce. I mean, that means that Indian markets today shortly would open at an all-time high yet again. You've seen prices gain up by 33% this year, which is the best yearly gain that you've seen in the last 14 years. So very, very strong gains continuing on to this one. But silver, not too far behind, has outperformed not just the equity markets, but gold as well. With 42% of gains in this year, it's a 12-year high for silver as well. And then the base metal prices are not too far behind. We've seen good gains onto this one. Most of Chinese data for the month of September has come in on the positive side. And the 25 basis point LPR rate cut does the trick yet again. So you are looking at stronger gains continuing for many of these metals. Copper, aluminum and zinc especially are trading quite firmly on the higher side.
All right, Manisha, thank you very much for that. So that's commodities in focus. We'll take a very quick break here, but as we do that, CNBC-TV18 is celebrating 25 years of excellence. We invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers, industrial leaders and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. Don't miss your exclusive opportunity to be part of the conversation that is shaping the future of business and innovation. Reserve your spot today.
Welcome back. Hope you're having a good morning. Well, we've listed down all the top stocks that you need to track for today. Prakash Devan joins us to help us out with his view on a whole host of names. Hi, Prakash. Good morning. Hope you had a good weekend. Let's start by talking about the big one. HDFC Bank came out with its set of numbers, and it appears those challenges that they had post the merger, they seem to be receding now. And the management's trajectory as well is clearly laid out, with regard to reducing the credit deposit ratio and, the growth outlook from here on as well. Your view on the numbers for HDFC Bank?
Good morning, Nigel. Thank you. So I think very, very clearly, these numbers are probably indicative of a turning point in the, in the bank's business. There was this underlying assumption that most of the difficulties, especially related to the merger blues, were unassailable. But these numbers tell you that when they put in the right kind of effort in the right spots, things have started turning around. I mean, you mentioned about the credit deposit ratio, which is actually at a 5-quarter low of sorts, moved below the 100 mark. The other important thing, of course, is, the reason it has looked at this number positively is you have a very strong deposit growth, which most other banks are struggling with. And HDFC's focus on, getting into that deposit build-up on the 25 trillion mark is absolutely very stunning in terms of, the response that they've got. There could be, you could keep on arguing about some, issues of credit growth and all of that. But I think that's a cyclical thing with the industry as a whole. So this will take time, and then they will outperform in terms of growth numbers as well when things happen, look up. But my sense is this is the turning point at this price. Nobody will have much of complaints in terms of, what they're doing with their metrics, which were an issue. So you'll probably see a very significant comeback of sorts, given where other banks are. I think the allocations to HDFC will improve dramatically in the next few days.
Got it. Prakash, hi, morning. On Friday, all these gas stocks sold off 10%, 12%, IGL, MGL mainly. And then, of course, Gujarat Gas was also lower. This morning, and we were asking this towards the end, is it a little overdone? I saw a note from Citi. I saw a few others asking, is the fall exaggerated, overdone? Are these buyable around here? What's your sense, Prakash?
Good morning, Prashant. So, I do agree. While the market always tends to, and the mood right now is such that if there is any bad news, there will be a little bit of an overreaction. There will be a follow through. People will start believing that it's time to book profits from some of these things. But my personal view is that these stocks are to be seen from a slightly longer term perspective. Utilities are never a couple of quarters or a couple of years play. I mean, you have a runway which is so significant. And especially look at how MGL has transformed itself from just a very marginal player into a slightly bigger regional player and now a dominant regional player. So, if you look at the kind of investments that have gone into their businesses, and this tariff issue will always be very dynamic. Things will keep moving up and down. But you don't take away the fact that these companies are extremely valuable from a replacement cost perspective. And from that, any dip in these stocks for the long-term investors, particularly in the retail side, I think it makes a lot of sense. So MGL, of course, is one of my top picks. And as a matter of disclosure, I do have an exposure to this. But that's more from a long-term perspective and a dividend yield play at some point in time. But any dip would be a buying opportunity. I wouldn't be worried about the transient issues that have been highlighted by some of these reports.
No, got it. Let's talk about a few other names, Prakash. Zomato was sold off aggressively on Friday. The board meeting is tomorrow for fundraise, right? Again, it's not clear what the fundraise is for since they're sitting on a fair amount of cash. And the other one is Manappuram, which also got smashed. Again, the question is, what do you do with these two? Are they buys here? For Manappuram, of course, there's the tailwind of gold prices, which are continuing to break new records, which is a positive at the margin. Go on.
So, Prashant, let me take this Manappuram thing first because, their MFI subsidiary was just a namesake blessing. It hasn't turned out to be that way. And the important thing is that when you diversify or step out of your comfort zone or course or competence circle, which in the case of Manappuram is a very clear example, and which a lot of other gold players have not chosen to do. I personally believe that this was an accident that was always in the making of such, given how MFIs, and I've been talking about MFIs being soft and things being difficult on the collection side. It's an issue which RBI has brought out, which we actually didn't anticipate, but which could take much longer in terms of impact. The underlying gold business could help Manappuram get back on its feet. So my sense is that if those numbers start looking up for at least some more time, you'll probably be able to get over this dent that's happened, the tailwind that you spoke about. So the headwinds are positive, but the tailwinds have to be negated yet. So it might take some time and could be painful for that period. So I really don't think that's going to be so easy in that sense.
Okay, yeah, big cuts on those stocks as well, gas as well as names like Manappuram because of the RBI action. Speaking of RBI, taking the conversation back to banks, Prakash, stay on. We'll have more questions in just a bit, but just dialing back to banks and some of the earnings that we've seen. Of course, Kotak Mahindra Bank was a disappointment. Primarily, I'm focusing on asset quality because what's come out in the numbers so far is that asset quality seems to be coming under pressure. Samir Bhise, who's banking research analyst at JM Financial, is joining in. Samir, good to have you on. Now, one was always going into this earnings season, watching these points very carefully. By how much will the margin be compressed? And what will be the rise in credit cost? Exactly what is the kind of asset quality pressure that we're dealing with? Now, early trends, if you see the slippage trend for Kotak Mahindra Bank, for an L&T Finance, or even for RBL Bank, I mean, they make you sit up and really take notice. Your first thoughts on the asset quality trends that we're seeing?
Yeah, hi. Good morning. So we had kind of highlighted in our preview note that 2Q is going to be more of the same of what we saw in 1Q, which is basically inch up in credit costs across the board, primarily emanating from the unsecured space, which is credit cards primarily, personal loans, and to a certain extent also players where there is MFI exposure. That will lead to some bit of challenges in 2Q. Which continues to play out in this quarter. I don't think we have seen the last bit of it. Expect some of it to sustain in upcoming quarters as well. And we have seen this in Axis. We have seen this in Kotak Bank as well. Unsecured stress, the regulator was right to highlight sometime last year in November, which is when they increased risk weights, and I think that plays through most of the sector today. Also, wanted to highlight.
Sorry, can you put some number to it? So when we talk about overall asset quality stress, what is the broad band that you're working with for this quarter and for the rest of the year? Whether, you can quantify that in the kind of rise in slippages or the rise in credit cost or the overall system-wide NPA levels. some ballpark in terms of what the overall thesis is. And then we'll come down to individual banks and stocks.
Yeah, so if you see, for most larger banks, unsecured portfolio is anywhere between 10 to 15% of the overall book, wherein almost more than half of the current slippages are emanating from. That probably implies that unsecured, especially cards and PL, are running at ratios which are higher than almost 3 to 4% easily, which is what is probably hurting the credit cost numbers right now. At the same time, microfinance, I think we have seen in some of the NBFC MFI numbers, wherein credit costs are upwards of 3 to 4%, likely to be so even in 2Q. And that is how I would put the expectations right now for these segments. But we still think that large private sector banks, despite the challenges, are relatively better placed, given that most of them are carrying excess provisions on balance sheet, as well as it's a diversified book. So it's not as if the unsecured book is a large proportion of the overall loan mix. So I think larger guys should still be relatively better placed.
All right. Hi, Samir. Good morning, and always good to hear your thoughts. Sounding a little bit cautious, I think, for the coming quarters with regard to the stress in the system, though you prefer large private banks in comparison to the rest of the banking pack. Samir, come in on RBL Bank's numbers. There was margin compression there, asset quality as well, clearly not great at all, multi-quarter highs out there. Your view on this banking name and the read-through?
Nigel, we don't cover RBL, so it won't be appropriate for me to comment on that.
Okay, all right. So you like private banks, but what is the top banking name?
Yeah, so we like ICICI and Axis. which are our preferred picks in the private banking space. While Axis had some issues with respect to credit costs, I think they are manageable. There is significant balance sheet cushion as well. And ICICI, obviously, as you have seen, they continue to outperform the industry with respect to growth, ROA, profitability, and asset quality as well. So that continues to be the top play for us. We also like State Bank of India. We think at current valuation, it makes a good case, especially for a bank which is growing at 13-14%, delivering 1% plus ROA. We think the valuations are attractive. So I think these three names I would put at top of my list.
Okay, just to finally wrap things up in terms of worst asset quality, negative surprises. What is the one name that you are watching out for in your coverage, and also margin compression? I mean, between the best and the worst, just leave us with the names because we'll wait by and see how the actual numbers look. But the expectations.
So I think, at least from the larger private sector lenders, I don't think one should worry much. But we would watch out for banks which have higher exposure to the unsecured segment. And that could probably be some of the smaller and second-run names. We also watch out for the microfinance asset quality, as has been reflected in some of the banks that have reported right now. At the same time, what one needs to look out is how the rate cycle plays out. While we are probably looking at a rate cut, most banks are now on the large side of the asset base is now floating in nature as well as linked to repo. So we will have some bit of margin compression when the rate cycle cut commences from the RBI. So overall, we remain slightly watchful on the sector as a whole.
All right, Samir, we'll leave it there. Thank you very much. Good thoughts and good to get them early morning. Anuj is now standing by with what he's making of the trade setup. Anuj, good morning.
Morning, Prashant. You know what? The market shown classical sign of double bottom. Let's see if that is the case because on Friday, you first broke the October lows and then we had a strong bounce and the Nifty closed at the highest point. And the bounce also happened from the 20-week exponential moving average. So it could be quite interesting. The 24-week exponential moving average was 24,569 and Friday's low was 24,568. So that's as close as you can get. The Bank Nifty, which is the biggest component of the market, didn't even break October lows and bounced back earlier with support from 100-day exponential moving average. So let's see. We need two back-to-back closing at days high to confirm the theory of bottom. China's stimulus, of course, is no longer impacting us. It's not even impacting their market. So I think our market has started to move from there. Keep in mind the big fall last week happened because of Bajaj Auto's numbers and the commentary, especially towards the consumption side. Weekend earnings were not that bad, especially HDFC Bank. The internals looked good, so that could be one stock which could support the market. Brent crude is down to 73, so that could be another positive factor for us. In terms of levels to watch on the Nifty, the first support is 24,700 to 24,750 based on the options data. And then 24,550 to 24,600, the 20-week exponential moving average and Friday's low. On the upside, the first resistance is 24,900 to 25,000. My sense is you might test that today. And then 25,050 to 25,150, which is where the last peak was, 10 and 20-day exponential moving average. The Bank Nifty, which is one shade better than the Nifty, the Friday close was very strong. It made a higher low, defended the 100-day exponential moving average, and closed above all major moving averages. So that's an index which I think has some more traction. If Bank Nifty closes at day's high today, I think that would be interesting. Then perhaps it could lead the Nifty and could even hit all-time highs. The first support here is 51,800 to 51,850, and then the most important one, 51,000 to 51,100.
Okay, Anuj, thanks very much for that. Yeah, as long as those earnings don't throw up any nasty surprises, maybe the Bank Nifty can be a savior, as you're saying. Well, let's see. We have to take a break on that note. Come back on the other side. We'll have our technical experts join in with today's trading setup and some trading ideas. Mitesh Thakkar and Sudarshan Sukhani with us in just a moment.
Okay, welcome back. There's 6 minutes to go for the pre-open session. Mitesh and Sudarshan are with us with what they'd want you to do as we kick off today's trading session. Gentlemen, good morning. Great to have both of you here. Mitesh, So what's the play here? Decent bounce, we'd be able to build on it, and how do you want to trade it?
Good morning, Prashant. Yeah, it was a good bounce, and the important thing was that the Nifty kind of managed to come back and close above 24 750 800 zone. That is the level which I've suggested will be important support. And on Thursday we had a closing of 24 749. So I think as long as you don't close below that, good chance that we'll consolidate or chop around in this range, 25 200 to about 24 750 800. And next few days could be spent, within this choppy consolidation. Only if we have a closing below 24 750 would I be looking at aggressively shorting the markets.
Okay, we have Sudarshan also joining in. Morning, Sudarshan. What do you think was the Friday bounce? Was it looking durable? Directionally, which way would you trade now?
Yeah, good morning. See, Friday's bounce, whether it is durable or not, is not easy to say. What's much easier to say is that thanks to that bounce and the fact that 24,750, 800 zone, the same zone that Mitesh was referring to, that zone held on. When the markets go below a support level, intraday bounce back and recover that level, at least we know that that's the point at which buyers had come in. So my point is that the trade, if you want to go long, then we have a level at which we say, okay, this is the point below which we will not hold long positions. That is now visible at 24,750. I don't know how much traction we have on the upside, but it is worthwhile taking a dip as a buying opportunity with a stop at 24,750.
Okay. Got that. What about individual stock ideas, Sudarshan? Good morning.
Yeah, good morning. Wipro is a buying opportunity. It's finally, putting in some kind of a show. Let's see what happens. It's a buy with a stop under 532. PVR Inox is a buy. That's moving sideways, but suggesting that some kind of a support is coming in. Buy with a stop under 1585. I have one intraday short. Remember, shorts are always intraday for me. Exide is an intraday short with a stop over 510. And finally, Axis Bank is a buy. It's an intraday buy. It's a positional buy with a stop under 1150.
All right, got that. Mitesh, what about you? Stock list for the day.
Good morning, Sri. I have a buy on HDFC Life for targets of 770 and recommend a stop at 729. National Aluminium is a buy with a stop at 227 for targets of 244. HDFC AMC is a buy with a stop at 4650 for targets of 4800. And Infosys, I think, had some kind of a breakdown, so could see more profit booking. Sell here with a stop above 1900 for targets of 1840.
Okay, all right. HDFC Life, HDFC AMC, Nalco, and one sell, which is Infosys. That's Mitesh's stock list. Gentlemen, thank you very much. We speak again soon. Appreciate you joining in. We're going to take a quick commercial break here. We'll have, of course, the pre-open when we return. We'll also have the management of Netweb Technologies. We talked to them about their second quarter earnings. Should be an interesting conversation. Stay tuned for that.
Welcome back. Well, in a few minutes, we'll get the pre-open rates. For the time being, let's go across to Chandan Taparia, derivative and technical analyst in Motilal Oswal Financial Services, who joins us on the show. Hi, Chandan. Good morning. Good to see you in. Well, tell us, what's your view on the markets, and also fill us in with your stock calls.
Good morning, Nigel. Thanks for having me. So, looking at the market structure, we witnessed some profit booking in last 3 weeks, but Friday was something which supported the bulls as market turned up by around 300 points from lower zone. The major support for the index goes at 24,442, but on the last day, it taken support near 24,550 something and turned higher. So we believe that now till it holds about 24,600, some more recovery could be there, which may take it towards 25,250. If 25,250 is surpassed, then the bulls will be back on track. But till that, we need to play the range between 24,442 to 25,250 marks. We believe that Bank Nifty could see the outperformance and selective stocks can do well, and Nifty can have an attempt towards 25,250, and above that, only the bulls will get a clear confidence and the conviction in the market. Looking at the banking index, technically it formed a strong bullish candle, an outside bar with rally of more than 700, 800 points. It taken support at its 100 exponential moving average. And the good part is, if I look at the bank nifty to nifty ratio chart, the ratio has turned from 2.03, which is historical lower levels. So because of that, we are expecting bank nifty to witness some outperformance over the next couple of days and weeks. So with support of 51,500, banking index can head towards 52,750 to 53,000 zone. Now looking at the stock ideas, first that is buy on ICICI Bank. The stock has negated lower top, lower bottom on the weekly chart with a decisive hold above 1250 zone. The stock has given a consolidation breakout of last 12 session. We have seen some build-up of long position with put writing, which also indicates some up move. So one can buy with support of 1240. And we are expecting this momentum to extend till 1320 marks in ICICI Bank. Second trading idea, that is buy on Voltas. Major trend of the counter is positive, but after the profit booking of last 4 weeks, it is again set for the next leg of rally. It has taken support at 50-day exponential moving average and started to form high rise, higher lows. We have seen overall short covering and now fresh long can take to higher zone. So one can buy with support of 1830 for an upside target towards 1940 level. Last trading idea, that is buy on MCX. We have positivity on the entire capital market sector, be it exchanges, broking, AMC or depository. And MCX is one of the strongest name where we are witnessing sustained buying interest. Rollovers and open interest data both are indicating bullish stance. The stock has seen the strong up move after the conservative move. Already has been making higher top, higher bottom on the weekly and the monthly chart. So it can extend the rally towards 68.50. One can buy with support of 64.40 in the counter.
Got it. All right. Thanks a lot for that, Chandan. Wishing you a good trading session ahead. Prakash Diwan is still with us. Prakash, just looking at the pre-open rates, Tata Chemicals, that's up close to 10%. I think besides the numbers, I think, there is that hope that maybe Tata Sons IPO could come into play. So I guess that's one of the reasons why it's up. India Mart is up more than 9% to kickstart trade, while RBL Bank on the flip side is down 10% because those numbers look quite weak. But Prakash, I wanted to ask you about Dalmia Bharat. That's a stock that you track. 2,400 has become 1,750. Those numbers were weak, but the possibility of the second half being stronger is rather high. And valuation-wise as well, it's come down to that sweet spot of around $85, $90 per ton. Your take?
So, Nigel, I haven't been as positive on Dalmia for some time, and for obvious reasons, there was a very clear shift in terms of, them. The tolling business that helped them all this while was not likely to continue given how the client was, the end user was shaping up. and the important thing is that these numbers, they've managed to do some decent volume uptick, but I don't think it's come at a very healthy realization, which means that this pressure on realization will continue to drag things down. And while, of course, I do agree $90 per ton is a fairly decent level, but I think given the setup, the way the larger players are getting so big, I don't think Dalmia Bharat will end up proving to be very attractive, even if it's valued at this $90 per ton. So it will take a while for it to turn things around in that sense and make that, see that comeback happen in terms of realization and volume growth as a combination. I'll wait for that. I know the next quarter probably is better for everybody, but then there could be some better options to look at than Dalmia Bharat, which might still take some time to turn the corner.
All right, Prakash, you've got the timing on Dalmia Bharat right in the past, so we'll wait by to see what goes on with that company. For the time being, a 4% decline is what we're bracing for. Thanks a lot, Prakash, for joining in. Have a cracker of a Monday ahead. Well, let's get to our first management on the show. Netweb Technologies, well, they reported a rather good set of numbers. Revenue, EBITDA, margins, all of them came in strong. Order book, though, saw a bit of a decline on a sequential basis. We have with us Mr. Sanjay Lodha, the Chairman and Managing Director of the company, who joins us on the show. Hi, Mr. Lodha. Good morning, and thanks a lot for joining in. Well, it was a good quarter. Now, in the first half of the year, you have grown by more than 90%. Last year, you grew by close to 60%. But yet, for the year, you're talking about 35 to 40% growth. Give us a realistic number, sir. Are you being very, very cautious? And also on the margin parameter, it appears on an average you've done 13.5 to 14%. What should we brace for the remainder of the year?
Thank you. Thanks for having me here. So basically, this is the sixth quarter result which we have given after the listing. And you see it has been consistent, actually. We are a company which primarily is into the enterprise segment and primarily focusing upon the high-end computing, private cloud, SCI, and the AI. All these segments primarily targeted towards the high-end government and the large enterprises, actually. So business has been very, very consistent, and basically our new product rollout, we are there on the right side of the segments and all that. So definitely that is helping us to keep our growth momentum on, and definitely it was a good quarter. And this year also we are predicting almost all, basically whatever guidance we have given up around 35 to 40% growth, because I think that's a year-on-year basis, because our kind of business cannot be judged on quarter-on-quarter revenue. It has to be judged on a year-on-year basis. If you see last year H1 and H2, that will give you much more that picture also. So that there has been almost 100% growth in terms of revenue as well as in terms of PAT. So we understand that. But overall for the year, I would like to guide somewhere around 30 to 35% of CAGR kind of a growth, because base is also increasing. We have to keep in mind. As regards margins are concerned, again, as I mentioned to you, all our customers are very, very high-end enterprise customers, and they use our systems for all production grade. We compete with all the MNCs. So we have to price our products very rightly and then basically increase our penetration, actually. And the expenses side also is growing, because basically we are attracting a lot of very good talent. A lot of people are joining us. So basically, so that is also a point. So we have been keeping our margins very, very consistent. And I will like to guide that there will be some basically maybe 50 basis point up and down on the up on the margin side. But I will not like to indicate that it will be a huge growth, something on the margin side. But on the revenue side, total, what I'm suggesting is 35% CAGR growth. I think we'll be able to hit that.
All right. So we got that 35 to 40% with margins being stable. Just one more question, sir. The promoter entity in August, they sold 3% stake and they're still holding above that 71%. Any further plans for them to go ahead and sell some more stake by the end of this year? Where are they comfortable in terms of a holding?
So we are very comfortable in terms of holding. Actually, there was basically, there has been a lot of interest from various segments, actually. So that basically, so they wanted some pie of it. That's the reason we wanted some good investors to come on board. That was the reason. Primarily, we don't have any targets, anything of that nature, so as to dilute further.
By the way, you have a tie-up with NVIDIA, right? And I think that was one of the reasons why there was so much excitement around the company. By the way, we have the NVIDIA boss in India later this week. So, it's going to be interesting. So the HPC business and the private cloud business, both of them are almost equal, 35-37% of revenues. And they've got AI systems and high-performance storage, data center, which is smaller but growing fast. Which of these are you most bullish about, Mr. Lodha, out of these segments?
Yeah, so first, I will answer your first part. The NVIDIA boss is here next week, and basically there is a major summit called India AI Summit, which is being held. We should understand the importance of it. Basically, there are only 3 summits which have been organized. First was in Washington, second is India, and third is in Tokyo. So these are the 3 summits which, and India is part of that. So basically, the AI market of India is being given a lot of importance by NVIDIA and others also. That's all. That's a good point for us. So we are part of that show, actually, and we are planning a lot of activities around that, which you'll hear between the next few days, which are going to come. As regards basically your question on which segments excites me, so very clearly, because all the 3 segments, you see HPC, private cloud, and AI, all the 3 segments are growth segments. But if you ask me today what segment excites me, really speaking, the growth will be maximum on the AI segment. What I personally feel, if you compare it from last year to this year, it was around 7% approximately in H1 last year, which is around 15% this year. So that is definitely a phenomenal kind of more than 100% kind of a growth there. So I personally feel this area will grow. But overall, I personally, since the other areas are also going, I don't feel that this will go beyond 20% anytime very soon, because basically private cloud and HCI, because data center market, whatever growth is happening, that we are getting a lot of cloud growth into it, cloud and HCI growth into it. So that is basically targeting there. And the basically high-end computing market is primarily focused on the HPC segment. So both the segments will keep on growing. If you see basically my history also for last 4-5 years, so both the segments have been keeping a balance. One quarter this is up, one quarter that is up, but primarily that is there. As regards basically, if you see my revenue split between government and enterprise, it used to be 50-50. So this year, this quarter, if you see, it is around 60% is enterprise now and 40% is government. So basically this will be very, very balanced business. And basically quarter on quarter, there can be some fluctuations up and down. But overall, what I have indicated on year, if you see, this will be very, very balanced actually.
Okay, you're sounding optimistic, Mr. Lodha, and the numbers are showing up. The NVIDIA boss is in town, and we'll look forward to another conversation with you, see what really comes out of it. And the stock's very excited because of all the reasons that you mentioned. Stock's done really well since the company went public. Okay, good luck with those plans. We now need to move on and look at that. I mean, pre-open Netweb up about 7% on the back of those numbers. So this could be a big one to watch out for. We're looking for positive news, right? In many earnings which are not that positive. Anyway, quickly on to some of the trading calls you can work with today. So Darshan, which stock will you go with?
Well, Axis Bank can be considered for buying with a stop under 1150.
Okay, and Mitesh, your stock?
I'll go with a buy on National Aluminium for targets of 244.
Okay, all right, gentlemen, thanks for that. Let's quickly go to Abhishek, I think. We have him joining in. RBL Bank perhaps could be the stock of the day, but not for very optimistic reasons. Let's go back and review the numbers. Abhishek.
Well, to begin with, the net interest margin declined sharply by over 60 basis points on a sequential basis and is at 5-quarter low. The slippages surprised negatively. It came in at 1,026 crore, the highest quarterly slippage that you are seeing in last 12 quarters. So the annualized slippage ratio is very elevated at close to 4.7% versus 3.3% in the previous quarter. It's at 8-quarter high. So their asset quality has deteriorated, and the already weak ROE or the weak return ratios continue to remain weak, and they are one of the lowest that you are seeing in last 11 quarters, both the ROA and the ROE. So Citi has written on RBL Bank. They have a buy recommendation. They have cut the target price to 255 from 281. They say that factoring in the unsecured stress, net interest margin pressure and lower than guided growth, this result is on the weaker side. They cut their earning estimate between 15%, 12% and 9% for FY 25, 26 and 27. So a huge cut with respect to earnings momentum by Citi on RBL Bank going ahead. Back to you.
All right. Abhishek, thank you very much for that. Just a minute to go for market open, and there's RBL, but so many more in terms of earnings implications which should be in focus. So let's just have RBL up on the screen, and let's look at India Mart as well. That was the other one which kind of disappointed, and there's been a downgrade there as well. So RBL is starting 6% lower in the pre-open. India Mart is down about 4.5%. The others, we should just quickly run through HDFC Bank, Kotak Bank, and see what's happening on those two biggies as well. HDFC is starting about 2% higher, so should support Nifty Bank at the margin. Just a few seconds to go as far as market open is concerned. I mean, apart from all the earnings, because Friday was such a large day for single stock moves, so many 10% plus moves, I think we'll have to keep an eye out on some of those city gas companies, names like Manappuram, Zomato, etc. as well. 0.5% higher in the first trades which are coming up. So 24,965, a bit more climb here. Nifty Bank is starting about 0.45% up, 52,360. The sensex is starting about 0.5% up. Mid-cap index has got 0.5% as well. So it's overwhelmingly green. About 38, 39 stocks perhaps in the green. With a few in the red as well. It's about 10, 12 names in the red as well. But holding steady, 0.5% actually, maybe building up a little bit more in the initial first minute of the open. So 100 plus points on the Nifty after the 100 that we saw on Friday as well. Surabhi.
It's a big fight between the Bulls and the Bears, a classic one really. You've got Tech Mahindra and HDFC Bank on the upside. So HDFC Bank is the big one that's trying to be a counterweight for the Nifty. Gain of about 2.5%. And Tech Mahindra's numbers, you really can't find fault. Margins rising by over 100 basis points. So it's actually taking some of the other IT stocks up with it as well. Wipro, for instance, is on the higher side. There's Tata Steel, Hindalco, two metal names that are doing well. There's Titan with gold doing what it is, and it seems that the festive sales are not all that bad. 0.5% up on that stock. Reliance is making sure that we don't see a wider fall. And Infosys is trying to claw back from the blows that it received on Friday. So some of these heavyweights on the upside. But now the downside. Look at the reaction on Tata Consumer. Consumer is really turning out to be a disappointment. I mean, there was Nestle and there's Tata Consumer. We've heard the commentary from D-Mart, etc. It's 5.5% lower on Tata Consumer. And then there's Kotak Mahindra Bank, which is down 3%. Asset quality stress, rise in slippages, margins down 10 bips. Market doesn't like any of that. So 3% lower on that stock as well.
Tata Group companies as well. Look at Tejas Networks. I mean, Tejas Networks, we don't talk about it, is the
20%.
top volume-led gainer on the NSE.
Yeah.
20%.
Absolutely. And then, I mean, overall, Nifty is holding on to that gain of 100 points, but really it's about individual stocks. My God, look at the reactions. 10% down on RBL Bank, India Mart 10%. So markets in not a charitable mood at all wherever there's a miss.
Well, that's right. You know, bumper numbers actually from Tejas Networks. I'm just looking at it, you know, on a year-on-year basis, on a quarter-on-quarter basis as well. Sales number of around 2,800 crores. Margins have improved drastically. They're doing 500 crores of EBIT. And net profit as well, 275 crores. So I think that's the reason why Tejas Networks is now up close to around 19%. Clearly, the stock of the morning. Tata Chemicals as well is up close to around 5.5%. So good move is what we're seeing out there. UCO Bank is reacting positively. So that stock as well is up close to around 3% as we speak. RBL Bank is taking it on the chin now. That one's down close to around 9% as we speak. So a hard knock is what we are seeing. And Dalmia Bharat, you know, we made this point earlier. The stock was down close to around 4.5% in pre-open. Now it's down close to around 1% odd. The con call will be there later today. So we'll wait by for sound bites. But since the street was net short on the stock, and since you're expecting a better second half of the year, there is some kind of recovery. Those sustenance will be very, very important on this one as well. By the way, India Mart, the shop is closed, you know, for the time being. It's hit that circuit, so there'll be a temporary freeze on that one. It's down close to around 10%. At 10:30 today, we'll be having the management of India Mart. So you stay tuned for that conversation. Let's find out how do they see things panning out. But it's a good start, a 100-point uptake out there.
RBL Bank, 17% down. I mean, that's the extent of the intensity, the selling intensity
9%
on this one. Okay, maybe my screen didn't refresh, so make that 9%, which is yeah.
A couple of other gainers, I think Oberoi Realty as well reacting to its numbers. So that one's up close to around 2.5%. So good going on that stock. By the way, the big headline this morning is HDFC Bank has moved past its 20 DMA post its numbers. The street liked the clarity that was given in the con call as well. And that's now the one that the bulls are counting on to take us high. So HDFC Bank is the one that's doing all the heavy lifting. And what it's done is it's breached the 20 DMA and the Nifty Bank as well has taken out its 20 DMA. So now the Nifty Bank seems to be the one that is driving the markets higher from here on. Sustaining these levels will be crucial. But good to see HDFC Bank returning back to its winning ways. Post that merger, a lot of rough edges. Some of them are getting cleared out.
Okay, well, let's just look at some more names here. Mazgaon Dock is up 6%, if we can have this up. So shipbuilders, by the way, on Friday as well, one of the few, not one of the few, but from the beginning, I mean, they never really were down. So Mazgaon is up another 6% this morning, and Garden Reach is up 5%. So these are large gains coming on, I mean, now large companies. Netweb, we just spoke with the management. Netweb Technologies is up 9%. So that's at 2,900 plus. So, these are pretty large movers. Tata Investment Corporation is up 5.5%. So actually the two Tata companies, Tata Chemicals is up 5%. Tata Investment Corporation is up about 5% as well at this stage. Amber is up about 4%. Amber at 5,600. JM Financial, I think we mentioned it, 6% higher. So it's seeing a bit of a reaction. Tata Chem has cooled off a little bit, but it's still a solid 4% more, near 4% gain. There is 361, which is up about 2.75%. So it's got volumes, by the way. Pilani Investment is up about 10%. It's coming up with volumes, so just making a quick mention of it. I mean, that's it. Market breadth is kind of closing in. It was clean, neat, 2:1 in favor of advances, but it's not so clean now. And we're sort of working our way through some of the opening levels. Manappuram was a sharp loser on Friday. It's down another 2.5% this morning. So just under 150 rupees right now as we speak. Viatec Vabag was a big winner. Through the last 5 days, it's pulling back a little bit, about a 2% odd cut. SW Solar is down about 1.5%. Yeah, I mean, lots of names starting out. Yeah.
I don't know if you guys saw JM Financial.
Yeah,
so 6% holding on to that gain with the RBI relief coming in.
Absolutely. Well, we have our market master of the day, Harsha Upadhyay, President and Chief Investment Officer Equity at Kotak Mahindra Asset Management Company. Harsha, good morning. Good to have you with us here. Thanks for your time. Is the market largely, I mean, obviously, if you look at single stock reactions, markets are reacting violently to earnings. But as we went into this earnings season, expectations were generally running low. So is it this, I mean, Q2 the markets are reacting to, or fears that maybe this festive season and hence third quarter may be a bit soft as well? What's the dominating driver, Harsha?
Good morning. As far as we are concerned, we were expecting Q2 to be as muted or even more muted than June quarter. So to that extent, it's not been a surprise. But yes, all eyes have been on the festive season in terms of what kind of a pickup we would see across various consumer focus segments, and whether that will lead to some amount of improvement in terms of the profitability trajectory or not. In case that doesn't pan out, then probably the full year numbers, which have already been cut after the first quarter earnings, will need to be revised downwards once again. So that is probably a worry that's across the market at this point of time.
Harsha, hi, morning. So just to expand on that thought process, when I'm looking at a stock like Tata Consumer today, the sharp reaction that the market has given it, I mean, down 5-6%, right? It's not like it went into the earnings some 30-40% higher. The stock has not done much through the year, and still it gets slammed very, very hard just because the growth numbers are not really lighting up the screen. So what do you think is sort of the way forward for consumer? What's really happening here? Is this really getting the market worried about a broader slowdown and maybe the rural recovery not picking up? Or maybe this is simply, buying patterns shifting, consumer preferences shifting. To look at the updates we got from gold financiers, from jewelry companies, 25-30% growth for most of the jewelers. So is it more of that? More discretionary, less staples?
Good morning, Surabhi. Clearly, I think discretionary consumption, while it is also slowing down in patches, has been better than on non-discretionary consumption at this point of time. Rural continues to be weaker than urban across many segments, I would say. The hope was probably you will see some amount of pickup in the rural-oriented consumption pattern, and that has not been seen at least up until now. So that's what probably been not liked by the market, and also not to forget that most of these stocks have been at valuations which have been more or less in line with their average valuations or above average valuations. So to that extent, there was not much room for disappointment in that sense. Probably that's what is leading to this kind of a reaction in the market. While at the overall level, probably the earnings are more or less in line with the expectations, but depending on whether each of those businesses are delivering the numbers as expected by the market or not, there could be a reaction as we go.
And Harsha, your house view, I mean, what are you doing with consumers? Is it market weight, neutral, overweight? Are you looking to buy the dip, be a contrarian here? Just generally, what's your house view?
Generally, we have been more positive on urban and discretionary consumption rather than mass-oriented non-discretionary consumption. Having said that, we have also added some position over the last couple of months, so mostly are trying to build a little bit of a defensive tilt to our portfolio. However, across portfolios, it could still be underweight to equal weight kind of a position. We have not gone too much into consumption across many portfolios.
Hi, Harsha. Good morning. Good to see you. And Harsha, I think you're overweight on IT as well, a few months ago at least. What is your current view on tech?
That's right, Nigel. We have clearly added IT across most portfolios over the last couple of months. And from an underweight position, it's probably an overweight position across portfolios. While we have not seen significantly different numbers during Q2, but we believe that there has been a broad-based stability across many verticals as you see results coming in. That's very, very evident. And also, this time around, the commentary around furloughs seem to be usual rather than anything to be extraordinary. So to that extent, I think things have been okay in the very short term. And also, there is a hope that depending on which way the US elections go, then there could be some upside for IT companies. Because if one particular party wins, there could be significant tax cuts as promised by them. And if that were to happen, then the corporate spend on IT in US can pick up significantly. So these are some of the things that we are also looking at. And currently, we are overweight on this basket.
All right. And the overweight stance that shifted from underweight to overweight came at the cost of a couple of sectors like autos. How are you all placed currently on the auto segment? We have a new listing, big one that's expected. And also Bajaj Auto's numbers last week, that was the result reaction of the quarter, I think, so far, with the stock tanking more than 10%. So your positioning on autos now?
Autos has been an underweight position as of now. We significantly reduced our position over the last 1 or 2 quarters. And the thesis there was the valuations have been rich across many segments of auto and auto components. And we were already seeing some sort of weakness as evidenced by increase in inventory across the pipeline for passenger vehicles, for example. And also, this festive season is going to be very crucial for the entire auto pack. If the volumes don't pick up around this festive season, then it could bring further downside to some of these stocks as valuations remain quite rich. And on the margin front as well, we think probably the best has been seen, at least in the short term, given that many of the manufacturers are looking to give further discounts to push volumes into the market. So overall, we believe that financial year 25 earnings for auto is going to be a lot weaker than what everybody anticipated, and also weaker than financial year 23 and 24. And based on that, we have actually cut our position in auto. It seems to be working at this point of time.
Harsha, the big winners last week, stock-wise, right? Friday to Friday, Motilal Oswal was up 30%. Angel One was up 16%. A couple of other capital markets plays. AMCs, Aditya Birla AMC, HDFC AMC. What's your positioning here? And actually, even wealth managers, I mean, if you can give us a sense.
We have positions across capital market focused players, be it brokers, wealth management firms, or asset management companies, depending on which portfolio you look at. And clearly, this is one segment where the penetration levels are very, very low, even at this point of time. And as penetration is likely to improve over the next few years, there are definitely good businesses that you can back and make money for the long term. Clearly, this is one space where we would continue to have positions in most of our portfolios, I would say.
Okay, all right, Harsha, we appreciate you joining in and giving us your view. Looking forward to having a chat with you as things progress. Wishing you a good day ahead as well. Well, let's focus on Hindustan Zinc. The quarter 2 numbers came a little better than what the street was working with. The operating leverage played out. Power and fuel costs did come down. The cost of production as well dipped. We have with us Mr. Arun Mishra, the CEO of Hindustan Zinc, who joins us on the show. Good morning, Mr. Mishra. Good seeing you today. Well, metal prices have bounced, and there is hope that China will bounce back. You had earlier told us that you expect zinc prices to hit around $3,000 per ton by the end of this year, but it already hit it in October itself. What is the zinc price band we should work with, given the demand-supply dynamics?
So I will stick to my earlier prediction. I had stated that by December it should reach $3,000. It has reached by October, and it will continue to remain in this range only till the end of the year. I guess after the US elections are over and the results are out, new government kicks in, we would know in which way the economy will turn. If the new government, whosoever comes in, keep the same push of infrastructure and there's green economy intact in USA, it has a cascading effect on the rest of the world. Although we don't sell directly in USA, but we know when USA starts importing lots of consumer goods, the overall sentiment on metal goes high, and also the zinc prices go up. So I think by January onwards, we'll see, depending upon the US results, moving towards $3,100 per ton kind.
Okay, Mr. Mishra, good to have you on the show, sir. Silver prices have been quite volatile as well. Earlier, you expected about $31 to $32 to the ounce, I think, but then it's corrected. There's some bounce back. What are you really looking at and expecting from the silver market in the coming months?
No, I had guessed $32, kind of a 31, 32 number. It has gone till that, and it will continue because silver is still in short supply, and the industrial consumption of silver is growing as we speak, and it will grow even more because almost all countries are pushing for renewable power, more and more solar panels, more and more low resistance, high conductive circuits. So more silver in the industrial applications will continue, and the prices will try to remain above $31, $32 a troy ounce kind of a number.
All right, Mr. Mishra, you've given us your volume targets. My question to you is, can you hit the upper end of the band with regard to volumes? And also, could you give us a sense about what is the contribution coming in because of the fumer? How is it functioning?
No, so the fumer, we had a really difficult time because one, we did not get the Chinese experts because of visa issues. And also this technology is completely new to us. So we struggled a bit, but now I think we have got a good grip over it, and we have taken the entire plant on shutdown because we wanted to do new lining of that the entire fumer, do some revamping, do some debottlenecking. So we are doing all that, and it will come back by end of this month back to operation, and we should see balance part of this quarter, which is November, December, and Q4. Fumer will run in full capacity and will get. But saying that, although we did not run at a full capacity and we had a lot of troubles, it still produced about 3 tons of silver. So we are happy at that.
Okay, got that, Mr. Mishra. Now, what about the overall volumes? Can you hit the upper end of your guidance?
Oh, not higher end. We should be going closer to the higher end. See, even if we repeat H1 performance, we should be ending at 1048 KT, which is bare minimum. And then Q3, Q4 are normally far better than Q1, Q2 combined. So we will be anywhere crossing the staying within our guidance that we have given.
But Mr. Mishra, what about silver then? You're given that band 750 to around 775. Can you achieve more than 750 tons?
Not 750 plus, we should be closer to 750. It is possible because we have already produced 350, and if we don't do anything, then there is a probability of producing 700. Of course, the fumer is coming back online, and say 6 months, out of which 5 months at about 3 tons each will be another 15 tons of silver. And then the all around H1, the grade of silver was 88 ppm in Sindesar core. Their bad phase would be over, and we should come back to 110, 120 ppm. That itself will add more silver to the kitty. So it's not very difficult to reach the guidance.
Well, Mr. Mishra, in your press release as well, you're sounding quite optimistic about the cost of production. It hit the lowest we've seen in 4 years for the first half of the year. Can you hit the lower end of the guided band that you've given us on the cost of production?
No, if not, right now at H1 level, we are at around $1,090 per ton. We are still within the guidance only, and we should go closer to $1,050 per ton. If not year average, but at least H2, we should be closer to 1050. At the why so? Because our renewable power mix is increasing day by day, which was say 9% last quarter, has gone up to 14% now, and will go to say 23% by Q3 end, 30% by Q4 end. If these numbers are coming true, then automatically my cost will also go down.
Okay, so you're optimistic on keeping the costs low. Your shareholders will like that. Sir, just talk about the silver business and the whole concept of value unlocking. I think there was some talk about you looking to separate that business out. So where are we on that?
No, so we are still in discussion, but at the same time, there are many other disinvestment is likely to happen as we understand from whatever we hear, and at the same time, this is also we are looking at. If there's a timing issue, we have already started discussion on doubling the production to 2 million tons. So there are too many things on the plate. And I think our first activity would do the logical sequencing is disinvestment. If that happens, other things will fall in place.
Interesting. So let's talk about the divestment then from the government of India. Could you tell us when could that possibly happen? Could it happen in this quarter? And I want to understand, last time around everyone was looking at the government of India, but Mr. Agarwal, that's Vedanta, came and divested their stake to some extent. Do you think Vedanta will come and sell some more stake, or do you think the government goes first?
I can't comment on what is the Vedanta would sell stake or not. Whatever Vedanta had to do had been done for their need of deleveraging. If we look at government, I think the action is long overdue, should happen as soon as possible.
Soon as possible could be this calendar year?
I can only hope for.
Okay, all right. So let's see when that happens. But let's wind this down then. A lot of your shareholders look at the company not just for the operational performance, but what about some dividend? Is there any big dividend payout likely? And also give us your capex plan. Just give us an update for this year.
I can't comment on the dividend policy as such. We are on the dividend likelihood because that's a board to take a call. As far as capital is concerned, we are still within that guidance only, and we should be spending close to $300 million in capital.
Okay, well, lots of details there. Thank you very much for your time. Appreciate it here as always, sir. Well, let's just look at the market now. We're down 40 points. I mean, it's a sharp turnaround from the day's high that we've seen. So this is, I think, should be about 150 odd point turnaround. And this is what we were talking about in the morning, that holding on to the bounce that we saw on Friday, it was a 100-point higher close Friday on top of Thursday, will be critical. So we've got the first sort of move which has come, and that has been on the way. The second, actually, the first one, of course, was the way up, but it hardly stayed because almost immediately, 917, 918 onwards, a downdrift started, which is accelerated, and we're on about 40, 50 odd points now. Nifty Bank should also come up on your screens. That is still holding on, but it's already a red candle, which means we are below where we left off on Friday. So, trying to see a bit of a recovery, but quite a bit off. The high of the Nifty Bank was 52,577, and we're at 52,200 or so. More on markets in terms of individual stocks, etc. We'll also put the focus on what to expect as far as consumer sector is concerned. Quarter se quarter tak, FMCG in focus. That's coming up.
Welcome back. Well, today Mangalam will focus on the second quarter's numbers, and the sector of the day will be FMCG. Mangalam, over to you.
Well, as far as the FMCG sector this time around is concerned, we're looking at some dark clouds before the festive season optimism kicks in. Why do I say that? Because, just to set the ecosystem in order, there's been a gradual rural pickup, but that's been offset by stagnant urban demand. So that's on the demand front. Competitive intensity has been very high, and this is on all fronts. Retail feeling the heat from quick commerce, jewelers feeling the heat from lab-grown diamonds, soap makers is seeing increased competition from each other, whereas paint companies are battling out the competition from the Birlas itself. Out-of-home consumption has been impacted by excess rains and flooding. Here too, competition in the beverage space, particularly from Reliance's Campa, has impacted some of the players. To add to the woes, we have raw material prices which have begun to firm up post-deflation, making margin expansion all the more difficult. And that's something that we've seen in the results that are out already. There have been weak internals from Tata Consumer. Nestle's volumes fell 1.5%, margins missed street expectations, and DMart called out specifically a quick commerce impact on its sales. And that's not just the numbers that have come by. Even from the Q2 updates that we have already, Dabur volumes and margins have been impacted by beverage inventory correction. Marico's domestic business posted mid-single-digit volume growth. Bangladesh has been resilient, so that was one of the better numbers that came by. But GCPL cited inflation and competitive intensity for India margins to be weak. For the jewelry companies, revenue growth has been led largely by higher gold prices, increased boost from the budget and store expansion. But they too are facing uncertainty from lab-grown, and there is concern that have people preponed their purchase ahead of wedding season in the second quarter itself, and will that happen in the third quarter as well? From a company-specific standpoint, analysts see a mid-single-digit sort of volume growth coming in for HUL, 2 to 3% cigarette volume growth expected for ITC, and a seasonal weakness expected in players like Asian Paints, Berger and Pidilite because of, again, excess monsoons and flooding. And from the recent industry trends and the recent results, let's look at some of the outperformers. Colgate, Honasa and Jyoti Labs are likely to be key outperformers in the staple space. There have been early signs of recovery in quick service restaurants, so this is a sector we'll be watching out for. And stocks of the dairy and edible oil sector may continue to see margin expansion due to favorable macros. But however, beyond all of these numbers, the most important thing to track will be the commentary on the festive season, because on that hinges many hopes of recovery in the near future.
Oh, absolutely, Mangalam. Thanks so much. And, our market master was echoing exactly this sentiment. I mean, people like Harsha, perhaps, who've gone slightly overweight on consumer, have gone so expecting that recovery to really come through. Will it, is the question. Abneesh Roy, Executive Director at Nuvama Institutional Equities, is now joining in. Abneesh, hi. While the market was dealing with a lot of potential issues here and there, from geopolitics to, commodity prices to what's happening with bank margins, I don't think disappointment from consumer companies was really sort of penciled in to this extent. from Bajaj Auto to Nestle to what DMart said. This is, Tata Consumer's reaction today, not looking too good. Your initial thoughts?
Yeah, thanks. So yes, if you see our preview, which was released a few weeks back, the heading was that the quarter will not reflect the kind of re-rating stocks have taken. So we are seeing profit booking because the rural recovery is there, but urban slowdown is clearly there. Why is the urban slowdown? Clearly, food inflation is very high. That does impact urban consumer much more. That doesn't impact rural that much because freebies are happening in the rural. Plus, a lot of the foods is locally produced for the rural consumer. So he doesn't face that same issue. Second, of course, is Q2, the impact of the competition was there, the weather was there. Going ahead, our sense is Q3, Q4, the rural recovery will further sustain. But urban, we continue to remain cautious. Our sense is competition, quick commerce, and urban slowdown is something next 1 or 2 quarters will remain. So that's why we will be more positive on names which have more rural presence and which have propensity to gain market share. So till now, yes, you are absolutely right. Most of the results have been on the negative side. But we do see that Britannia, Colgate, even Pidilite, Bikaji will report a good set of numbers. So it is not that the entire sector will see the numbers which we have seen till now.
Okay, that's heartening. We need a ray of hope when it comes to the space, right? Because we only got negative news. But even on rural, I mean, I go back to Dabur's commentary, right? And I think Dabur was the first one, suddenly got the debates stirred up, and I remember we spoke as well. On rural, since that's where your optimism is, what is the recovery you're penciling in? And what about this whole quick commerce disruption, because of which inventory levels and, channel and distribution sort of situation is really moving around quite a bit?
Yeah, so good question. So in terms of Dabur and rural overall, what we are seeing is Campa Cola, clearly big disruption in the beverage space. We have put out multiple notes and we got the investor pushback that no, the taste is not suiting the Indian customer versus a Pepsi and Coke. What we are saying is clearly 10 rupee pricing by Campa Cola is quite disruptive. And they have really overcome the supply chain issue of the glass bottles by coming out with the PET bottle. This has led to Pepsi and Coke cutting prices. This has led to distributor margins getting expanded. So beverage space, clearly we are cautious. We do expect India business of Varun Beverages or say Dabur Juice business or say Gluco Plus business or Tata Consumer. Those would continue to remain under pressure in the coming quarters also. Coming back to rural, yes, we will see good numbers. As I said, from Britannia, we see almost high single-digit to double-digit volume growth even in Q2 when the numbers come. Bikaji double-digit, HUL also 5%, not bad number. Colgate around 8%. So I will say in rural, we are seeing recovery, and Nielsen numbers are also corroborating that. If you see NREGS number, which is a proxy to understand how the rural jobs are, that is seeing a downtick for now the last 9 months. So that means the rural guy is getting better jobs. If you see private consumption, which has been disappointing for the last 2 years, we are seeing some improvement, 7% growth coming there also. MSP hikes, exports being liberalized in terms of agri exports, that will lead to more incomes. BJP has won the Haryana, so we are seeing a lot of freebies now being offered in Maharashtra, for example. My sense is next 4 years, because of coalition government and because of competitive politics, we will see rural being higher than urban consumption for most of the FMCG players and even for the apparel players. So we are positive on the rural. We are cautious on the urban demand for sure.
Okay, all right.
Coming to quick commerce.
Yes, go ahead.
Last question you had. Sorry, I didn't answer that.
FMCG, the FMCG disruption, DMart, Dabur, all of them talking about quick commerce.
Yes, you're absolutely right. DMart clearly pointed out towards competition from quick commerce, and now we are seeing Zepto, Zomato, Swiggy all raising funds almost every month or say planning IPO. So that remains a concern. So our sense is general trade will keep losing market share, and FMCG, if you see in some cities, now quick commerce, e-commerce and modern trade is bigger than general trade in some of the cities already. So that is something with general trade, Kirana outlets have to grapple with. I think FMCG players will be more than happy eventually to transition more towards quick commerce, e-commerce and modern trade. But for DMart, I think it's a question mark because they don't have quick commerce and they need to really address the market share loss issue which is happening and some urban slowdown which is also impacting DMart. So we are cautious on DMart. We'll prefer Trent and VMart in that space, in the retail space.
All right, let me squeeze in one on the paint space then. Abneesh, I recall that, you all had turned positive I think a few months ago or so, and because these stocks have underperformed. Now you have crude oil prices that have declined, which will help them out on the margin, and prices as well have moved up. What's your view on the paint space, and what do you like most? Abneesh?
Yes, Q2 numbers, as we had highlighted, will be weak because of excess rains. Yeah, am I audible?
Go ahead, you're audible.
Hello? Yeah, am I audible?
Yes.
Sure, sorry. So Q2 results we had highlighted because of the excess rains, there will be some weakness in terms of the overall results. We expect 6-7% volume growth, but we expect EBITDA to decline because of the high base. Outlook is positive. As you rightly said, pricing is improving and crude oil is not a concern, titanium dioxide not a concern. Marriage demand should come back for the jewelry players, for the paint players, for the sector, wherever marriage kind of demand is there. So outlook is positive, but Q2 numbers will be weak for Asian, Berger, etc. because of the excess range and high margins in the base. In terms of Birla Opus, yes, there is an improvement quarter on quarter. But if you see 70,000 crore industry, if they take say 300 crores or 400 crores on a quarterly basis, still it is not impacting in terms of the market share any meaningfully. So they can coexist with the legacy players like Asian and Berger. Our sense is Kansai and Akzo will face the issue of long term, where do they see themselves in India? So Akzo has already highlighted that they are reconsidering their entire presence in India. My sense is Kansai also need to do that at some stage.
All right. Abneesh, we'll leave it there. Thank you very much for joining us. Great perspective on a variety of issues there. Appreciate your time here on CNBC-TV18. Look at the market sell-off. I mean, it's down 100 points now, which means we're about 250 points gone from the day's highest level. So that's the extent of the fall. And I think we need to address this, which we will in just a bit from now. But let's focus on the next management. ICICI Lombard is with us now. Now, numbers for the quarter were a decent set. Net earned premium operating profits came in line. Combined ratio was up about 60 basis points, about 104.5. We have Gopal Balachandran, Chief Financial Officer at ICICI Lombard now, joining us to take some questions. Mr. Balachandran, good morning. It's always a pleasure. Thank you for your time. Prashant this side. You know, before I get to the numbers, there was the GST sort of committee meeting, the GOM meeting, and there the deliberations have resulted in sort of thinking about or proposing a cut, a GST cut for health insurance. Could you talk to us about what? So there are two things. One is for senior citizens. Second is for cover under 5 lakh rupees. What we reported. Could you tell us what is the, what's the proportion of these segments to the overall health pie for ICICI Lombard, and what will be the implications if this is exempted, if these are exempted from GST?
So, Prashant, good morning to you and to all your viewers as well. So honestly, I think at this point of time, I think let's wait for the final things to get fructified. I'm sure the relevant committee is looking at all the contours of what to exempt, where to reduce the rates, etc., etc. And I think obviously we will kind of evaluate the impact of that as and when that gets announced. But having said that, I think where all of this conversion is largely discussions are largely coming from is the fact that I think when you look at it in the context of health, I think the potential for growth is significantly long term. And therefore, in that context is where I think equally there's a thought process to kind of make sure that the buying of the insurance process also becomes largely affordable insofar as policyholders' interests are concerned. I think that is where pretty much large part of this conversations is coming from. So honestly, at this point of time, let's wait for the final announcements to happen, and then maybe we will be able to come back and specifically talk about what does it do from an overall market perspective, and let's say even within that, let's say so far as ICICI Lombard is concerned.
Mr. Balachandran, we're just sort of discussing theoretically speaking, so we're not going to hold you to anything. Of course, it's for the government to decide and they will decide. But since we have you right after this weekend announcement, so it's very much on the anvil, exactly what we'll know. But I'm just trying to understand, you must have already, you must have it offhand. If it's senior citizens under 5 lakhs, what proportion of the business is from those segments, sir?
Yeah, so to be honest, Prashant, as I said, at this point of time, we haven't kind of done specific impact assessment because honestly, we will wait for some of those announcements to actually get fructified. And then I think we will obviously be able to come back. I think what I can tell you for sure is if you look at in general, I think the thought process from a customer standpoint is to significantly look at possibly increasing the extent of coverage that an individual or their family or let's say even a corporate that wants to take a cover for their employees are concerned.
Got it.
So in general, we're seeing an increase in the coverages that one is still looking at.
No reduction in premium?
So honestly, as I said, insofar as if there's a reduction in rate, then to that extent, as I said, it kind of largely becomes affordable at the hands of the policyholder. And therefore, to that extent, what does it translate into any impact? Because at the end of the day, whatever tax that we collect on the GST is effectively that we end up remitting to the government. So hence, to that extent, which is where I said, we will obviously wait for the final announcements to happen, and then we will be able to come back and tell you what the impact could be, if at all, for the market and for ICICI Lombard.
Absolutely. And of course, policy holders will absolutely love any sign of reduction in premiums for sure. Mr. Balachandran, good to have you on. Thank you very much for joining in. So just to talk about the other aspects of the results, and I think the debate here is that you've had great growth, right? I mean, I think about a 17% growth when it comes to premiums. But there is also a little bit of an increase in underwriting losses. The combined ratio has gone up. So just contrast this for us. Why the rise in underwriting losses? What are the really two different trends?
Yeah, so that's a great question to ask. I think, so again, if you look at from a thought process standpoint, I think from an ICICI Lombard standpoint, I think you would have always heard us talking about profitable growth as a theme. And therefore, to that extent, I think we stay committed to that in terms of whatever growth that we are driving across the preferred lines of businesses. But if we look at the inherent nature in the way how accounting of revenues and accounting of cost takes place, you will always find in periods of uptick in growth, a relatively higher outcome when it comes to an absolute underwriting outcome. The reason being, whatever premiums that we kind of underwrite, that gets earned over the contract period. Let's say if the policy is for 1 year, then the revenues will be earned over a 1 year period. However, any costs that we incur with respect to sourcing those policies, they get expensed out immediately in the period in which it is being incurred. So to that extent, there will always be an element of an underwriting adverse outcome if you were to look at the time of writing the risk. This possibly gets addressed when you look at the combined ratio point that you referred to, because that takes care of this possible nuance of revenue getting earned over a period of time and expenses getting upfront impacted. Now there, if you look at the combined ratio number, for Q2, I think that the combined ratio looks like at about 104.5. But again, as we kind of explained also on the earnings call, this quarter specifically, we did see a lot many more instances of floods happening. I mean, there were floods pretty much all across, whether it's Gujarat, whether it's Telangana, whether it is North India, etc., etc. And that's the reason every time we also carve out and separately put out the impact of our results, excluding the impact of these flood events. And there, if you would have looked at, again, this 104.5 will translate to about 102.6%. And this 102.6, if you were to look at on a like-to-like basis of Q2 of last year, again, excluding flood impact, that number was about 102.8. So actually, we actually seen a small positive improvement insofar as our combined of from 102.8 to 102.6. And what we've also been telling the street is to kind of, we stick to our thought process that we have, which is to get to an exit combined of 101.5 by the end of this year.
All right. Hi, Mr. Balachandran. Good morning and good to see you. And one part of the street will say, why do we have to make these adjustments? And hopefully in the coming quarters, there are none of these adjustments that they'll see. So for the first half of the year, you have done close to 9,500 crores of premium collected. Last year, you did ballpark close to around 17,000 crores. Going by the first half performance, for the year, should we look at premium collected at around close to around 20,000 crores with combined ratio at 101.5%?
So, Naishal, it's a good morning to you and so to your point on in terms of the combined ratios, I think you're absolutely right. I think what we do pencil in at any point of time is obviously a stated number of catastrophic events that one would kind of possibly see happening through the year. But unfortunately, if you look at in terms of what's happening on ground in terms of possible impact of climate change, there seems to be a lot many more unprecedented instances of floods happening across the country. And that's something that we would have to obviously wait and watch in terms of how that plays out for the market. And therefore, to that extent, in terms of what it does for ICICI Lombard. But from our standpoint, I think we obviously want to give that impact separately called out. But what we will hold ourselves is obviously to drive the combined ratio at a company level. In response to your first point. On the point on growth, I think if you look at last year, Last year, we ended the full year with an overall gross revenues of roughly about 25,000 crores. Now, in that context, when you look at the first half of this year, I think we have kind of, as we indicated, we have grown by almost about 15.5%, with a combined of, on a half-yearly basis, about 103% thereabout. At least insofar as the road ahead is concerned, I think we believe, and this is something that I talked about even at the end of Q1 earnings call, which is relative to wherever the industry would kind of end at, we would obviously want to see ourselves with a delta at an aggregate level of at least about 100 to 200 basis points, assuming the market remains sensible in terms of pricing and discipline. And that's where we stand committed. And that's also, which is the reason why I said, from an overall growth standpoint, we could expect the industry anywhere between early double digits to early high teens. In that context, we would obviously want to see 100 to 200 basis points growth over that and exit Q4 combined ratios at 101.5%.
Okay, Mr. Balachandran, just to go back to that point, I know you were telling Prashant that one has to wait and see the final outcome of the GST announcements before knowing the granular impact. But I mean, at a thematic level, whatever is the ease off in tax that's allowed, whatever percentage it might be, or if it gets waived off for a certain category, I mean, will it be a full pass-through, or will it still leave you with some elbow room and some leverage? So if you could give us a general sense on how premiums will move on the health side. They've already been moving higher, but what is the further appreciation? And then any tax relief, will it straight away be a pass-through and will it go to the end consumer?
So that is exactly the reason why I kind of spoke about that, Surbhi. That's the reason why I said I think obviously we will have to wait for some of those contours to play out. And so hence any of these announcements, we'll have to look at it in the context of in terms of is there a reduction in rates? Is there an end-to-end kind of a pass-through insofar as the entire transaction in the context of health insurance is concerned. So all of those factors is something that one will have to kind of get to as and when we will get more clarity. And that's the reason why at this point of time, I had said that we will wait for this announcement to play out before we can kind of commit specifically in terms of what does it mean for us.
To push you for one number, Mr. Balakrishnan, I asked you about the net earned premium, which is at around 9,500 crores. You briefly spoke about the gross premium for last year. For this year, the net earned premium could hit 20,000 crores?
So Nigel, if you ask me, I think for us, what we would largely look at is a growth in revenues, because as I said, earned premium is purely a function of how that income will be earned over the contract period. And hence a better metric to look at will be more the gross premium numbers, which I said full year we ended at about 25,000 crores. And on a half yearly basis, our growth has been about roughly about 15%. And so that's where we kind of stand at this point of time. And depending on how things play out, I think we stand committed to that 100 to 200 basis point possible alpha over the industry growth numbers, subject to market remaining disciplined. And on the bottom line, exit Q4 combined ratios at 101.5%.
Okay, all right, Mr. Balachandran, we leave it there, and we hope to have you back with specific numbers on, when we have the final decision on GST from the government. Thank you very much for joining us with that perspective for now. 100 points lower, so for the market, I think there's a bit of a bounce which has played out. We were down 150. And there is some recovery, but 24,740 is where the market finds itself at right now. Lots of stocks moving around, and that's going to be the focus as well. We're going to take a quick break here. We get you a quick exclusive conversation with Rajiv Bajaj, Managing Director of Bajaj Auto. That's coming up. Stay tuned.
Welcome back. You're watching CNBC-TV18. Now, Bajaj Auto has been in the news after the company delivered in line with estimates as far as the Q2 results go. But there was a drop in stock price last week to the tune of about 12%, largely due to a weak commentary on festive sales. Now, to explain what's happening and what's probably going wrong with the festive sales, we're now joined by the MD of Bajaj Auto, Mr. Rajiv Bajaj. Mr. Bajaj, thank you very much for joining us. We also spoke to the Federation of Automobile Dealers, who believe that two-wheeler sales growth in the festive season will still be in double digits. But Bajaj Auto has slashed its festive estimates to 3 to 5%, which is below industry expectations. Why is that?
Good morning, Parikshit. The short answer to your question, Parikshit, would be that I think the FADA is likely to be correct. And let me explain why I believe so. When we are talking of festive sales, before we talk of the numbers themselves, we have to dwell a little bit on the qualitative context in which those numbers are being delivered. You know, what I mean is that everybody is talking about the growth in terms of the Vahan registrations. But the other important information is the dealer retail to customers. Now, the Vahan information is the correct basis for discussion because that is in the public domain, whereas the dealer retail to customers is obviously, you know, the private domain of each manufacturer. What happens in a typical month through the year is that this retail lags the registration by a few days to a week or a little more, depending on the state that we are talking about. But at the festive time, the gap becomes considerable. For example, I can tell you, on the day of our board meeting last week, our motorcycle Vahan registration was only about 2/3 of our dealer retail. Now, this happens particularly so every few years in a month like this October, where you have a double whammy of Dussehra and Diwali, of course in a positive sense, happening in the same month. You know, that tends to completely overwhelm the RTOs and the dealers, and customers also obviously get very busy in a month like this. So I think what is happening here is that when you use the same instrument to measure this month as you do the rest of the months of the year, you are likely to capture a moment in time which does not represent the holistic picture. So, you know, what we said about the growth as it stood in terms of Vahan registrations about 10 days back was based on the data at that time. But as the weeks evolve and we come to, let's say, early December when Rakesh will speak with CNBC again, you know, we may well turn around and say that now the growth is closer to double digit and not lower single digits.
So what would be your estimate as of now on festive sales from Bajaj Auto?
Okay, so let me give you the bigger picture. First of all, you know, the data that we are all seeing in Vahan is a composite two-wheeler data. It doesn't give you the breakup. So each company has to kind of infer for itself, and of course we informally compare with each other. So there is a component of scooter and moped sales that I cannot comment on because we don't participate in the scooter and moped segments. In motorcycles, again, as you are aware, there is a trend over the last several years that the 125cc plus industry, which used to be about 35% of the domestic motorcycle industry, is now up to 55%. And obviously a trend like that is not going to reverse. And within that, Bajaj Auto has been, in particularly last few quarters, really going from strength to strength. And again, a company's portfolio cannot go sour suddenly overnight in a particular month. Now, to answer your question more directly, based on how we infer the breakup in the Vahan data, we are seeing ourselves at this time in the 125cc plus segment, which is the segment of our focus, growing about 40% higher than the industry rate. And that has been the trend for the last so many quarters, because of which we are close to market leadership in that segment.
Right. So 40% growth in the 125cc plus segment. Has anything been a drag on festive sales, something that you had not anticipated?
I must correct you, Parikshit, if I understood you right. We are not growing at 40%. We are growing 40% faster than the industry in our understanding. Now, coming to what may be some extraneous factors, as you asked, well, there is one which is simply this, that the 100cc market right now is faced with very steep and deep discounts by two of the largest players. And as I mentioned before, that since this is not an area of focus for us, we do not have, if I may say so, a rupees discount on our products in this space. So as a result, one may see for a short period of time till the end of the festive that both the 100cc industry, which has come down to about 45% of the total industry, you know, may show a little bit of an uptick. And similarly, the shares of those who are discounting are also going to show a little bit of an uptick, because this is nothing but basically preponement of sales from subsequent months, because you don't change the trend, the customer trend, with a 5,000 rupee discount on a 1 lakh rupee product. And one might say that, okay, this is the choice Bajaj Auto has made to stay away from that, and that may, in that sense, show us in somewhat poor light in that segment at this point of time. But then, Parikshit, business is not just one-dimensional, right? It's not just sales. It's also on the bottom line. I mean, there is a reason why our EBITDA percentage is double that of the industry and market cap almost thrice of the other major players.
Any plans to cut back on production here onwards and for any particular segments?
Well, not really. In fact, I can tell you we are going flat out in October because obviously this is the peak month. We have to go flat out in November also in terms of production per day basis because the Diwali holidays take away 3 or 4 working days at that time. And even when work is restored, there is disruption due to absenteeism. And I can tell you the main reason why we need to go flat out is not only because our domestic portfolio continues to do well. If you have some time later, we can talk about especially the Freedom, the Chetak, the Triumph, the KTM, and of course the Pulsar, and of course the three-wheelers. We are looking at a 50,000 plus per month sales for the three-wheeler in both October and November if we can produce that. But I must share with you that we are seeing really good traction finally with exports. It's a question that CNBC anchors have been asking Rakesh for the last year or so. Last month, as you're aware, we clocked exports of 156,000. After a long time, we exceeded 150,000. This month, we are looking at 170,000. And next month, I believe we should be closer to 180,000, which is, near our pre-COVID normal of 200,000. So that is what is going to mainly drive the factories incrementally this month and next.
Right. I would also like to ask you about, you've already answered that you are possibly going to see double-digit growth when we see your numbers by December. What will be the growth drivers here onwards for Q3 and Q4, according to you?
Well, I would say, Parikshit, they will be the same that they have been in recent quarters, starting with the Freedom, the CNG motorcycle. I am pleased to say that we seem to be on course to make and sell as many as 30,000 Freedoms this month. And all of that, as per the data that I see in terms of retail, is getting retailed out, and they are bound to show up in registration by the end of November. Rakesh has already said that he needs capacity up to 40,000, and I know that he's sitting in Brazil and contemplating the next incremental step for capacity on the Freedom. So that's really good. The Pulsars will continue to drive it. If you again look at Vahan data for the states where we were relatively weak in Pulsar, like the large markets of UP, Bihar, Jharkhand, West Bengal, we have gained a lot of share in the recent quarters. The new Triumph's been received really well, and in the next quarter, that is the last quarter of this year, you will see 2 or 3 new KTMs, which, for me at least, are very exciting. They are all new. These are not upgrades. These are completely new KTMs. The Chetak, I think with a bit of luck, we can strike 30,000 again on the Chetak this month, which is well above our capacity. So we've done a lot of work to improve productivity there. That, as I told you last time we spoke, we are pushing up to 40,000 by April next year. And of course, the three-wheeler is doing well, and the exports I just told you about. So I think, on all these 6 axes, the growth is continuing nicely, and if I may say so, profitably.
Right. In your Q2 earnings call, your team said that a refreshed range of Chetak will be out by mid-November, and this will significantly improve the margin structure as well. What can customers expect from the refreshed range of Chetak?
Well, yes, it's true that from mid to end November up to Jan, in that period of about 2 months, we will refresh the entire Chetak portfolio, and we will give consumers even more of what they desire at the core of an electric scooter. First and foremost, reliability, because I believe Chetak is today considered perhaps one of the most reliable, if not the most reliable, e-scooters in the market in every sense. For various reasons, I won't go into those details right now. So more reliability, we will have a bigger battery, so obviously more range, better charging capacity. a little more of some of the more secondary attributes like storage space, floor space between your feet or ahead of your legs. Stuff like that will just make the scooter more comfortable. And yes, from our point of view, there is a very significant reduction in costs with this third or fourth generation Chetak. So I'm happy we are moving up that learning curve really nicely.
Right. Specifically, I would like to ask you about any plans to prepone any launches. You've mentioned a refreshed Chetak range. You've mentioned new KTMs. Anything that you plan to prepone to excite the sentiment?
Not really, Parikshit. That's not possible. I mean, in a certain sense, we always, our product plans are always a function of the overall capacity in the organization. So it's difficult to prepone something just like that. But yes, I will say that the one thought I had shared with you that we would like in the next financial year to participate in the e-rickshaw market as distinct from the e-auto and e-cargo, which, by the way, we are doing very well. Again, you have seen last month's Vahan data. I'm sure that we are, neck to neck for leadership there in just 15 months after launch. So I think the e-rick will take our three-wheeler business to a completely different level. And that is something we want to start off as early in the next fiscal as possible so that we benefit from it throughout the year. So that would be one, but otherwise, no change in plans.
What would be your outlook for full FY25? This is something that a lot of people would want to know.
I think in the first half, our cumulative volume, two-wheelers, three-wheelers, domestic exports, everything put together, Parikshit, is a little more than 2.2 million, if I remember that right. And I would say, on the one hand, it would be at least that much, which means about 4.5 million by the end of the year. But I suspect it will be a little more than that for the reason that if you look at the export component in the first half, it is about 850,000 vehicles, two and three-wheelers put together, which means about 140,000 a month in the first 6 months, which, as I just shared with you, we are looking now at numbers like 170, 180 a month. So, if we are going to on an average, and again, this changes by the month, so I may have a different number for you by December or January, but as things stand now, if we are going to have just exports go up by 25,000 a month for the remaining 6 months, then that itself will add 150,000. Hopefully a little more traction in domestic sales. For example, we just launched in the last week a very, very nice, sweet new Pulsar 125. So, this, and of course, the production of Freedom and Chetak going up. So all of this should point towards something like 4.7 million, something like that. But I think Rakesh is a better person to answer this question.
All right. Do you think the stock price correction that we saw last week, was it mainly due to the low festive sales outlook?
I don't want you to get me to do a musk here, but I don't know why the stock corrected. I mean, a stock that has grown by almost 100% in 12 months has to correct at some point, I would imagine. But as far as I am concerned, I stand by my projection of 20,000 rupees as the long-term target price in my head. Not that I am the expert of this subject, as I've always said, but more importantly, I am certainly, if I can, going out and buying some stock because something that corrected 20%, perhaps based on a somewhat temporary understanding of an evolving situation, presents a nice upside in the weeks to come.
Right. Certain brokerages have downgraded the stock to sell from reduced, citing high valuations amid normalizing growth. How would you address concerns on the high valuation of the stock?
I don't think as a manufacturer we can do anything, Parikshit. I mean, it is typical of the stock market that it will lag for some time and then it will suddenly rise and then it will run ahead and then it will correct. So I think this is the volatility in the cycle that allows people to make money when they buy and sell. So that is the nature of the territory, that is the nature of the beast. We have to stay focused on the motorcycle market.
Right. So finally, just if you can leave us with an overall outlook on the festive season, you expect double-digit growth when we look at the numbers in December finally, Mr. Bajaj?
Yes, I would say so. Particularly, I must emphasize for the area of our focus in the domestic motorcycle segment, which is the 125cc plus. Certainly, that may not be the case in the 100cc. If I may say so, we couldn't care less. And of course, particularly with something like Freedom and with the Chetak in the e-scooter, that growth is going to be tremendous. I don't even want to try and calculate that number. Three-wheeler is going to be, a handsome growth, and exports looking really good. So, that would be the big picture for the company as a whole.
All right, Mr. Bajaj, thank you very much for joining us with some of those clarifications and how you expect the growth to be strong across the company's segments in the months going forward. On that note, we're taking a short break here on CNBC TV18. Much more on the other side.
Welcome back. So let's just get back to the market after that very interesting conversation with Mr. Rajiv Bajaj. There's some attempt at a recovery. And just to quickly talk about the stocks, on the upside, Nifty is now nursing about a 50-point cut. HDFC Bank, the biggie, is really fighting like a titan, almost 4% higher on HDFC Bank. That is the biggest counterweight. Because aside of that, there's also Reliance, which is at least not falling. Between these two, you have the bulk of the firefighting. Otherwise, of course, still has been a negative morning. But speaking about stocks that have at least not disappointed, have actually done pretty okay in terms of the expectations. Tech Mahindra can be counted in as well. Along with HDFC Bank, it's also, chipping in. Rima is joining in. Rima, tell us what worked this time around for Tech Mahindra.
Well, it's a stable quarter for the second consecutive quarter now. The company's constant currency revenue growth of about 0.7%. Remember, Tech Mahindra has a new management in place. They've put in a turnaround plan. They expect by FY27 the company will be at industry-leading growth rate and margins of 15%. And the analysts believe that what we've seen over the last 2 quarters is a step in the right direction towards that. The key verticals, telecom, which is 33% of their overall revenues, and BFSI, a focus area, are both firing for the company. There is still margin improvement, 9.6%. Profits have gone up 47%. Nomura says there is a turnaround underway, a steady progress towards their medium-term goals, which is why they have a buy call. But Jefferies is not very bullish on Tech Mahindra and underperformed rating. They say Q2 revenue beat was encouraging, but they still see the company's aspiration of achieving 15% margins as optimistic. Valuations at 26 times forward multiple looks rich. So which is why they have an underperformed rating. But as I said, Q2 was a good set of numbers and the company is on the right track. Back to you.
All right, Rima, thank you very much for that. From the good to the not so great, Tata Consumer is still bearing down. Almost 7-8% decline on the stock today. We've got Mangalam joining at 8.5% right now. Let's go back to Mangalam to figure out where the misses are. Mangalam.
Well, it's a sub-1,000 rupees stock now. A big 8.5% cut is what we're seeing on Tata Consumer. And here's 5 reasons why. The first one, of course, is that their India beverages business, that did not do too well. Remember, Tata Consumer was earlier known as Tata Global Beverages, and beverage business actually underperformed with 3% revenue growth cut and 4% volume cut as well. In fact, they lost market share in tea to the tune of almost 20 basis points. The second part, ready to drink, which was a fast-growing business for them, actually saw competitive price action and also unfavorable weather conditions. So that impacted their revenue by almost 11%. The third part, their growth businesses, which the company had guided for being 30% of their business and growing at 30%, as a result of the above mentioned, grew just about 15%. Foods business as well, the organic revenue growth was just 9% and volumes grew just by 1% as well. Management has said that it is the tea business which was impacted by subdued category trends, and they are starting to see synergy benefits from Capital Foods and Organic India, and that's where the silver linings lie. The first one is international margins have actually seen an improvement of nearly 500 basis points. Acquisitions, both Capital Foods and Organic India are doing well. But, the problems are far too many, as a result of which there have been a lot of brokerage downgrades as well. So we have ICICI Securities, which has trimmed their estimates, earnings estimates by 7 to 8%, downgraded the stock. Goldman Sachs has actually cut the EPS estimates by around 10 to 14%. And Morgan Stanley, too, has said that market share over margins is the key near-term concern. They, too, have cut their target price.
Okay, all right. Got it, Mangalam. Thanks very much. So, That's the one that's taking it on the chin right now, along with Kotak Mahindra Bank. As we sign out of Bazaar, let's just pull up that stock as well, because there's no recovery right now on Kotak. Those asset quality concerns really bearing down. So there you go, almost 6% on Kotak. Tough morning for the bulls. That's where we take your leave on this edition of Bazaar. Stay tuned. Chartbusters coming up next.